Good morning, everybody. Excuse me. Good morning and welcome. How's everyone doing today? Good morning, Luciano. Good to see you in here. Steve, nice to have you. Erla, always a pleasure. Hamid, good to see you. The other Mark, the cooler, much more handsome Mark. And then the other Mark, the other Mark right behind him. Good morning, guys. Good to see you. How's everyone feeling today? You ready? We gonna do this? I think we're gonna do this. You're live, not a bad start. I feel the same way, Jeffrey. When the eyes open, things happen, which is great. All right, guys, let's do it today. If you were watching the market at 8:30 a.m., you noticed a big spike. You noticed a huge run up, and it was just an emotional response. They started talking about the core PPI. And once that news was released, somebody with deep pockets reacted, guys. So every morning I'm checking news and I'm making sure that I know where these high impact news releases are, because they can mess up everything. They can make the market change directions. Good morning, Elon Reeve Musk. Why do I have the feeling that's not really Elon Musk? But that's okay. You don't have to use your real name in here. Guys, this just gives me the heads up. Hey, guess what? Things are changing, right? Things have the potential to change. The market has the potential to spike, to bump, to jump. So every morning I check for news. I go to forexfactory.com/calendar. And if there is high impact news, I choose to do nothing. That's typically when I go make breakfast, 8:30 a.m. That's when I'm refilling my coffee. And that was good stuff. Morning, PFI. And then, guys, everything that I talk about every day, we're going to slow roll today. I feel like it's going to be a mellow pace today. Comes from the trading guide. Everything that you need to know about rules to be successful with the software, everything that you need to focus on as a brand new user, I'm going to give you in this first hour. I'm not going to hold back. I'm not going to give you a little and make you dance for more, guys. I'm literally going to give you every tool that you need to be focused and have the potential for a profitable plan as you learn to understand your indicators, guys. And we're going to do that this morning, and the same as every morning, with what we call a high probability trade. And a high probability trade just means that each indicator on every chart is going to agree with the rules for the trade, guys. Triggers are going to be their strongest, no termination conditions in the way, and there's going to be no trouble spots between your entry and your target, guys. And this is the best of the best. This high probability trend trade, as it's taught in the room, is a trade that has the potential to win up to 70 to 80% of the time. The high probability trend trade, I love this phrase, it creates confidence through the memory of success. You begin to build trust in your indicators and trust in your ability to use this methodology to recognize patterns. And then this high probability trend trade, and the most important thing that it does for you is it teaches you to read your indicators. It teaches you to understand the information that the indicators are giving you, guys, and you're learning to read your charts. You're becoming a chart reader before you are a day trader. Because it's your chart read that's going to let you know that the rules are met. And chart reading is about 90% of what you do every day. It's not surprising to do nothing for an hour, for 2 hours. But the cool thing about the market, and I dropped this in the room earlier, the futures markets, the markets trade on average around 300 billion each day. 300 billion. You have to capture 500 of that every day to have a six-figure income from trading. So we're going to focus on chart reading first. We're going to talk about advantages. And you're going to understand, guys, just through looking at your indicators, where the market is likely to continue. And initially, that's going to be your entry for the highest probability trend trade that we teach. You're going to understand where the market is likely to go. Excuse me. This is going to help you make good decisions on profit targets. And you're going to understand where the market is likely to stop. And I really feel like this is the most important lesson that I can give anybody, is understanding where the market is likely to stop. Because these likely to stop areas are notorious for pulling money out of new users' pockets. These likely to stop areas are what we call termination conditions. And a termination condition is essentially where the people that control the market are making decisions. And we don't ever have to get caught up in their decision making. So we're going to focus on this high probability trend trade, guys. It's only 3 rules. Each rule of the high probability trend trade will give you an advantage. So the rules are in white, the advantages are in yellow. And it is the advantage of momentum, a clear path, and then finally that entry area for the high probability trend trade initially. That's your recipe for a trade. So when you open up your charts and you're looking at them, I want you to start on day 1. If you're brand new with me, I want you to start talking to yourselves in terms of advantages. If you are returning to come back to kind of refresh a little bit, start talking to yourself in terms of advantages. Always out loud. I mean, literally scare your pets. Do I have momentum? Do I have a clear path? Let me find an entry area. And once you find the first 2, once you understand strong trigger lines, giving you the advantage of momentum, once you can identify those termination conditions and you understand whether or not you have a clear path, you have everything that you need to take these trades. Guys, give me a Y if you can hear me, please. It looks like we lost Red Rob. All right, and he'll know. He'll know to reboot. Thank you. And this is one of the things that I'm really trying to focus on for you guys, especially you new users. And I see a couple of you in here. Welcome. It's great to have you. If you keep it simple initially, if you really focus on the idea of momentum and a clear path, you're going to have everything you need to create this successful trading plan. And it doesn't take a really long time to get good at these. And then once they're present, your initial entry, the first entry that you're going to learn, is going to be the entry for the highest probability trend trade. And that is the trade that typically wins 70 to 80% of the time. And in the spirit of simplicity, we're going to focus on only 3 things, 3 rules, and we're going to do it on only 2 charts. A lot of people love to add stuff. They add rules, they add charts, they add their own personal spin on the rules. And that's great, guys. You're going to walk down the road and you're going to become more in tune with what it is you're looking at in the markets. But in the beginning, if you allow it to be simple, if you look for the least amount of things, you're going to find the most advantageous things. So when we're looking for these 3 rules, we're going to use the 2 charts. And specifically, we're going to use the first bar on the large chart. The large chart is a slow chart. It's a slow moving chart. It's difficult to see change on, which is okay. We don't need to. And the large chart is going to define the direction of the market. It's going to let you know whether you should be looking for your rules to be met for longs or shorts. It will define the momentum in the market through rule number 1, giving you a market that is likely to continue in the direction of that trend. And it's going to define whether or not you've reached a termination condition areas. And this is rule number 2, and it's going to literally tell you on the most current bar, hey, guess what, me lad? You have momentum, you have direction, and you have areas. Ollie, absolutely, because it's not mandatory. A strong top or bottom is not mandatory. Not for the high probability trend trade. It's a perk. But why give you something else to think about, right? Because in order to understand a strong top or bottom, Ollie, you've got to be comfortable with rule number 2. So why not focus on rule number 2 first? And that will naturally take you into the idea of a strong top or bottom. Does that make sense? Cool. Simplicity. And then guys, once you have momentum, once that path is clear, we're going to turn our attention to a smaller, faster chart. And this smaller, faster chart is nothing more than a refinement tool. Inside every bar on the large chart, there's about 20 to 30 bars that you'll see print on a smaller, faster chart. And it's this refinement process that allows us to pinpoint the best of the best area, that point where the market is most likely to continue. So your first 20 days with me is going to be focused on being able to recognize where the market is most likely to continue and having a plan to enter the market at that point. And this is going to allow you to reduce your risk dramatically. It's also going to help increase your profit potential, guys. And that's what rule number 3 is designed for. Nothing more than the entry. And you'll find that my first hour doesn't talk about extras. It doesn't talk about management. It only focuses on being able to recognize where the market is most likely to continue. And we use these two charts because both chart is a reflection of who's controlling the market, guys. The large crowd is the large chart. The large crowd are the deep-pocketed men and women, the institutional traders, the people that honest to goodness can create trends, that can establish momentum. And these are the same people that are reacting at those key areas that you're going to see on the large chart. Let these guys lead the way. The large crowd tends to win. And it's easier to simply go with them. Your small chart is going to be a representation of this smaller crowd. And the smaller crowd is still a lot bigger than us. And they have it in them to create these little shoves against everything that the large crowd wants. There must be something great going on with all you guys posting. I love this. And these little shoves, guys, these little retracements or pullbacks as we call them, the small crowd fails 70 to 80% of the time. So we're using this methodology, we're using this idea that when these guys say up, and when these guys provide momentum, when these guys have no areas they're reacting to, we're going to pinpoint using a smaller, faster chart exactly where the small crowd is likely to fail when they try to fight the large crowd. And that little point becomes the entry for the highest probability trend trade that you can take, the trade that typically wins more than it loses, the trade that creates confidence, and really the trade that teaches you to read your charts. So in this classroom, and really with the software, there is a step-by-step path to getting to where you want to be. And I'm going to tell you right now, guys, I fought this path tooth and nail. I fought this path like it was my duty to fight this path, which is crazy because my brother wrote the software and has been teaching people to trade for 27 years, and I just assumed he was full of shit. Pardon my French, YouTubers, and everyone in the room. And he told me this exact same thing when I started. He said, post your trades in my classroom, Mark. Take your charts and tell me what you see, because all we're doing is we're learning how to read indicators right now. So you need to, if you really want to be good at this, you have to post in the room. And don't just show me a picture and make me guess what you're doing, guys. Go back and reference. What do I see? Talk about momentum. Talk about a clear path. Talk about an entry area. Because the whole idea is that you're learning to become a chart reader. So when you talk about those three concepts, when you tell me what you're reading, if there's anything that needs to be adjusted, maybe we need to have a quick lesson on momentum. Maybe termination conditions aren't clear. And guys, it's okay to not be 100% as a brand new user. Every time you present in the room, guys, it's literally a one-on-one session with me. We're going to look at your chart. We're going to talk about what you did. I'm going to take what you wrote, and I'm going to give you my 2 cents, and together we're going to work together to get you closer to your goals every day. That's how the classroom works. And then the second thing is you're going to track your performance in a spreadsheet. I give my spreadsheet every day, guys. This is it right here. I'll drop it in the room right now. Just an Excel worksheet. You can download one from the website. If you go to the trade tracking sheet, and if you don't have Excel, guys, just get that Open Office. It's already on your computer, Nexgen 20-day or 90-day study. And you can get the same functionality with Open Office. But there's 4 tabs on this sheet. The first tab is just a trade journal. That's all it is. Every time you take a trade on Simulator, win, lose, or draw, take a picture, write about what you saw, post it in the room, and then put it into your spreadsheet, guys. And there's the instructions on how to paste. There's the instructions again on how to annotate to get the most out of it. And what you're doing is you're talking about when you did it and what kind of trade was it. Take your picture, drop it in, and you're going to identify, you're going to start talking about those advantages on your tracking sheet. Was momentum present? Did I have a clear path? These are the two that you're really focusing on as a brand new user. And then you can record your wins or losses. Sometimes people like to do that because it's fun to watch the progress. And then feedback from class. Every picture that you give me, you're going to get some level of feedback on it. Sometimes the feedback's just going to be, holy smokes, this is perfect. Don't ever miss this trade. This is your trade. And that's like the best feedback ever, right? But sometimes we have to talk about it, whether you needed to manage a little more aggressively, whether or not you didn't have that clear path. And the idea isn't that you just take the feedback and then leave it alone, but every morning come back and study these. There's a little bit of work that goes into becoming successful, guys. But if you come back every day and look at what you did yesterday, you're going to start asking yourself what worked and what didn't work. What made me feel relaxed? What made me feel nervous? And what happens is this little study every morning, it'll take you 3 or 4 minutes. You'll start focusing on the patterns that are bringing you success, and you'll start focusing on avoidance of the things that seem to be robbing you of that success. And guys, I'm going to tell you right now, we all have a thing. Everybody has a thing that they do. Everybody has a rule that they feel more inclined to break. Mine happened to be termination conditions. Rule number 2. That was my Achilles heel. And then my brother, when I posted in the room, when I showed him my charts, he gave me some feedback and he gave me a plan to help me avoid those termination conditions, guys. And that's exactly what we're going to do. We're going to spend the first hour learning the rules, learning the looks for when it's time to take a trade. And I always encourage my new users, let it be 2 options in the beginning. Either your rules are met or they're not. Start training yourself from day 1 that 90% of your day will be doing nothing. Simulate, practice, make mistakes, but post them in the room so that we can talk about it. I have 0 expectations for anyone in this room to be perfect at what we do because I've never met anybody that was perfect at what we do. But the cool thing is we can be good enough to make money, and we just got to refine some bad habits every now and then. We're going to simplify. We're going to talk about that high probability trend trade. We're also going to talk about a medium probability trade today, and that just means that most of your indicators line up for the trade, but there might be a problem. Your ability to read charts is going to define that problem, and you have to manage those a little more aggressively. Your ability to read charts is going to allow you to manage more aggressively. So I encourage you, focus on the high probability trend trade first, and it's going to open doors. And then, Doug, don't confuse patience. And I'm going to cover this. Sometimes I get too patient and miss trades. You can't be too patient. But the thing is if you don't trust your rules, if you begin to second guess your rules, if you begin to ask yourself, man, are my rules really met? Then, Doug, what you really need to do, typically, I'm not putting words in your mouth, is you need to study your rules so intently that you don't miss the correct trades and that you feel comfortable avoiding the wrong trades. And I used to do the same thing, and I blamed it on everything. I'm not taking that trade because XYZ. I'm not taking that trade because XYZ. And what I would do, Doug, is when I felt like I was being super patient, what I was doing is I was manufacturing 1,000 rules to keep me from losing money. And I don't know if you're in the same boat, which is why simplicity pays dividends. Because what happens is, Doug, you either have momentum or you don't. You either have a clear path or you don't. You either have an entry or you don't. And these are the only 3 things you're looking for, and it's hard to talk yourself out of a trade if you understand these rules. And it's going to be easy to talk yourself into a trade if you're bored. So commit to learning them, commit to trusting them, and that's where the spreadsheet comes back in, guys. There's about 400 pictures of client trades here. You can start burning the looks into your mind of what it looks like when the rules are met. There's a section for you to develop your own trading plan from the patterns that you see. And then there's a 101 tab, and I'm going to give you a sheet on how to really get the most out of this. But all it is in green, it's the rules met. In red, it's the rules not met. So, Doug, on that same thing, if you got 3 greens, go, right? If you have a red, the rules aren't met, that's when it's time to be patient. Don't be patient when the rules are met. So study them, look at them, take those pictures, go through it every day until the looks are easy, until you've begun to trust the rules to where you don't hesitate on the rules. And that takes a little time. Good morning, Zorro. So what I find is the people that talk themselves out of trades are looking for more than the basics. And this is me just airing my dirty laundry, Doug. I was the exact same way. I was so scared to give money back in the beginning that every line was a termination condition, not just the ones that fit the rules. And the smallest fluctuation on a trigger line meant that I didn't have momentum instead of just following the rules. So we're going to keep it really, really focused, guys. And we're going to talk about strong triggers first. Large chart leads the way. Man, it's the first rule for a reason. I'm going to say that. It's the first rule for a reason. Strong triggers is probably the easiest of the three rules to recognize. When the background is green on your large chart, the market's going up. The large crowd has decided that the trend is up. That's which way they want to go. We're going to look for rules to be met for high probability trend trades long. And in order to have those strong triggers, rule number one met. Guys, the small triggers, these solid lines, and the dash triggers, the large triggers, they're dashed. That didn't flow out very well. These are going to work together. And honestly, guys, in order to have strong triggers, the colors have to match. The background, the large trigger, and the small trigger have to all be green. The small trigger is going to be up and above the large triggers. And the large triggers have to be widening. There has to be that space growing between the two here. And when they separate, when there's that gap in between the two, think of scissors that are opening, and I think this is probably the easiest visual for most people. If you think of scissors, and there's their top blade, and there's your bottom blade, right? And when those scissors are open, you can cut. You can get work done. And the same is true in a downtrend. When the small triggers break below the large triggers, when the large triggers are wide and angled in the direction of the trend, there's our little handles. Those scissors can get work done, guys. And strong triggers mean separation between the small and the large. And when you have this separation, the odds are favorable for the market to continue with the trend, whether it's up or whether it's down. So you're going to hear in the room all day long, odds favorable momentum. Odds favorable momentum leads the way, guys. Having odds favorable momentum means that your market is likely to continue in the direction of the trend. Odds favorable momentum can break those key areas on your large chart. Odds favorable momentum can even cover some of the mistakes that we all make as new users, because momentum is a driving force, guys. And when you've got strong triggers up or strong triggers down, this is the beginning of the best to buy Fibonacci support on a smaller, faster chart for entry, to sell Fibonacci resistance on a smaller, faster chart. And on a large chart, you're going to see on that one bar, it looks like a tail. And that one bar with that momentum, it looks like a tail. You're going to be able to pinpoint exactly where these tails are most likely to form, and that's actually going to become your entry for the highest probability trend trade on that smaller chart. We're not trading tails on this slow moving chart, but you'll be able to pinpoint where they're likely to form, and you'll be able to use these tails to go back historically, to study the entire setup, to develop trust. So strong triggers pushes a market, and guys, once those small triggers work their way back inside of the large, we've lost that momentum. This is a weakening of the large triggers. And when I have weakened large triggers, anything can happen up or down. Huge fan of language. And strength, odds favorable, all these great descriptive words, right? Weak, anything can happen. And guys, these anything can happen triggers, when they reach areas, even in the middle of nowhere, guys, they can stop a market. Strength pushes the market up, the weakness shows up, and there's your big retracement, right? Weak triggers right at key Fibonacci areas, look at the pushback, and then there's that strength, guys, pushing the market up, even breaking key Fibonacci areas. Strength pushing down. So you can go back and you can study this look, guys, and this is kind of part of what we're going to do using that spreadsheet. is you can open up your capture software. Everybody has it. If you've downloaded software, you have TechSmith Capture. I'm going to pull it up right now for my new users. Guys, find it in your little Explorer bar. Type in Tech, and you're going to see TechSmith Capture. This is it. Where did it go? Here we go. It's a giant red button. That's all it is. It says Capture. If you click it, it's a click and drag tool. So I can left click and I can, get some pictures here. I can go through, and once I release, it's going to have me take a picture. And guys, this is how you're going to become good at chart reading. Let me blow this up. You can draw an arrow to that separation between the small and the large, and you can click and drag, make that call out box, and you can say small above large, all green, space means strength, right? You're just really, you're just killing why it is what it is. Odds favorable, momentum, rule 1 met. And if you go through, hi Goddess Divine, if you go through and you take this picture, what you're going to recognize is that strong triggers is always strong triggers. Rule number 1 is always rule number 1. So you can take that same annotation and talk about them here, and then you can do the same where you point to weak triggers. And you can say weak, small inside large, no momentum, rule 1 not met. And what you're doing is you're associating the look, the rules being met, with the words. And you're going to learn to speak to yourself in terms of momentum and clear path. So you're going to click on this upload button. And what it's going to do is it's going to give you a link. It's going to put your picture in the cloud. If you click copy, you can drop that in the room and we can have a conversation about your recognition of strong triggers. And then you can come to your spreadsheet and you can go to those rules and you can add a picture to the strong triggers. And what happens is, guys, if you take 25 pictures of strong triggers, you're never going to mistake it. If you take 25 pictures of weak triggers, you're not going to mistake it. You're committing these looks to memory so that you can catch them when the market is live. Is everybody cool? Strong triggers leads the way. Strong triggers can push a market. And then once you have strong triggers, it's going to push you to the next rule. That's your green light to go to the next rule. And guys, I'm going to tell you right now, if you're brand new with me, I see some new names in here and some late arrivals. We are talking about one trade right now. We're talking about the best of the best trade. We're talking about the highest probability trend trade ever. So Goddess Divine, love the name. So let me explain how I teach the class, just so everybody's cool with it. And guys, what you're going to find is this is a very laid-back class. So Goddess Divine, your first day or two, I'm not going to lie, it feels like drinking from a fire hose. There's a lot of terminology, and it takes a day or two to click. So don't feel bad about being lost. Don't sad face it for me. And what I do is every day, the whole goal of this classroom is to teach you newer folks how to read your indicators. And that's all it is. It's taking the information that the indicators are giving and being able to recognize a few very key advantages. So we're going to teach 3 rules on only 2 charts. Simplicity is my battle cry every day, guys. We're going to talk about strong triggers. We just talked about those. And we're going to work our way into termination conditions. And these 2 things, momentum and a clear path, these are going to carry you to 1,000 different trades. But in the beginning, we're going to keep it very focused. And once you have both of these, once you understand both of these, you've got enough to create this awesome trading plan. Something that can be profitable, consistent. So we're going to focus on breaking them down individually so that the recognition becomes easy. But until you're there, I'm also going to give you guys a plan. I'm going to give you guys a rock solid plan to follow that revolves around these 3 rules. And the whole idea of this classroom, Goddess, and all my other new folks, is that the first hour we're just going to look at the rules. We're going to begin to learn the rules. There's no things that are off limits, right? Ask a million questions. And then our second hour, our third hour, are dedicated to giving feedback on everything that's dropped into the room. So every time a new trader, an old trader, drops a chart in the room, they're going to do me the honor of talking about what they see and why they did what they did. And it's live feedback, 15 hours every week, talking about what's good, what's bad, what's right, what's wrong, what can be done better, what was done perfect. And that's the whole basis of the classroom is feedback. Learn a couple rules so that you can be consistent while you learn to become confident with the software. And then as you practice, just ask for help all the time. The hand is constantly raised. And you're constantly saying, hey, Mark, this is what I saw. Did I see it correctly? Mark, this is what I thought. Did I think it correctly? And what's cool is we just kind of work hand in hand until you get to where you want to be. It's usually a lot of fun. Don't put the pressure on yourself to be perfect in the first week. Don't put the pressure on yourself to be this superstar trader during your demo. But what you're going to find is through participation in the class, from watching what people are posting, is that the software does work, that the methodology is solid. And guys, this is the best hammer you could ever buy. But if you don't learn to build a house with it, it's just going to collect dust in the drawer. So we're learning how to swing the hammer, got us. Does that make sense? And for all my other new folks, it's a very specific education path, and all we're doing is building a foundation initially. So we talked about strong triggers, the advantage of momentum. Once we have that, guys, we have to make sure that the path is clear. And we're going to use lines on a large chart. And these are going to be the areas where those people in charge are making decisions. These are the areas where buyers buy, where sellers sell. We've all heard that old adage, buy low, sell high. Well, now you're going to be able to define it. And you're going to have an easy set of rules to define lows and highs, to make sure that you see them, that you don't trade into them, and that you're aware of them so you can trade from them. The areas that we look for, and this is nothing more than a roadmap, guys. There's no rules associated with this picture, but rather it's just defining the lines that you're going to see on a large chart that may be problematic. Divergence, highs and lows, it's a magenta line, a pink line from a pivot. That actually means there was a loss of momentum. There's a cyan line or a light blue line from a low pivot, and this means there was a loss of momentum. That's all divergence means in this classroom, was loss of momentum. You're going to see red Fibonacci resistance. You're going to see blue Fibonacci support. You're going to see yellow one-to-ones. And guys, go through and just know that lines on a large chart are where decisions made. Don't rank them. This is not more important than that, and these aren't more important than those, guys. They're lines on a large chart, and decisions may be made. And we're going to use the trigger lines. We're going to use those same trigger lines that establish momentum. So here's another picture, just roadmap for you new guys, to determine whether these areas are likely to stop the market, whether they have the potential to break, or whether they've broken. That's it, Milad. It's just a map. That's all it is. We're just naming the countries. We're not talking about the culture. So, rule number 2. When you have momentum, rule number 2 just says, hey, let's not trade into areas that may stop the market. Those are what we call termination conditions. And when I don't trade into termination conditions, I'm going to have room to my profit targets. And when I have room to my profit targets, ladies and gentlemen, we're going to call that a clear path. This is your second advantage coming from rule number 2. And when you couple it with momentum, it's an insanely powerful duo. So those areas on the large chart may stop the market. It's where decisions are made. And I'm going to backtrack to this picture real quick. The people that are in charge, they know where these areas are. The people that are in charge know exactly where our fibs are. They know where these one-to-ones are, and guys, they react to them often. So in order to define a termination condition, the first thing that has to happen is we're going to allow our price bars to reach that area. We're going to let price get there, because who's making decisions before they get to the decision-making point, right? Nobody's ever ordered a Big Mac 4 cars back in the line. You wait till you get to that area, to that order spot. So if price reaches resistance, an area of resistance, and guys, remember, this could be a red line, this could be a divergence high, this could be yellow one-to-ones. When it reaches a line, All you have to do is ask yourself, where are my triggers? That's it. It really is that simple. Where are my triggers, guys? And if my triggers are below the area of resistance, then it's an area that may reverse the market. It's a termination condition. Decisions might be made there that could affect our forward progress. And the reality is you'll never know. Nobody ever sends out a memo and says, hey, guess what? That red line's going to hold. So we use the trigger lines to tell us, let's be patient. Let's wait just a second and let's see what happens. Price comes down, reaches an area of support. It could be one of those light blue divergence lows. It could be yellow 1-to-1s. It could be a blue fib. When price reaches the area and the triggers remain above, this is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area that may reverse the market. Rule number 2 is not met. It's not a clear path. No more trades into that area. Guys, this is the most basic form of understanding termination conditions. And if you go back to a large chart once again, after all of this movement up, it was Fibonacci resistance that absolutely stopped it cold. When it retraces, once again, Fibonacci resistance stops it. Support, resistance. It defines consolidation. And guys, if you've ever traded outside of Nexgen, consolidation can be a pain. We can see it through rule number 2. And these fibs, guys, support, resistance, over and over, can stop the market. You know about them long before we ever get to them. You know where these divergence lows are. You know where these fibs are. And guys, they break. They break with momentum all the time. But in the moment, when you get to one, it's okay to do nothing. Does that make sense, everybody? This is the first part. Let's identify when they're trouble. Can you give me a Y in the room if you're with me? Price reaches, triggers below, triggers above. No trades. Just relax for a second. It's weird to think that you don't have to be in every move to make money, but you really don't. So when are they broken? When can we start looking for our rules to be met again, guys? Once again, it goes back to the triggers. When your small triggers and your large triggers get past the area, below support, above resistance, you'll see a couple things. One, the path is clear. And guys, your path only remains clear until you hit the next line. And then the process starts over. But with a clear path, you're going to look for momentum. And if you have it, you're going to start looking for one of those entries. You'll be able to pinpoint where these tails are most likely to form. And guys, you'll find that support behaves as resistance when an area breaks. And resistance behaves as support when an area breaks. Let's see if we can find an example of it from the live market. Here we go. Resistance breaks, and now we're getting a little bounce as support. There was a great example here. Resistance breaks, and the market pulls right back to it as support, right back to it as resistance. And guys, you're going to see this all day long. And all we're doing is we're coupling a couple things together. We're taking a few basic ideas and turning them into the highest probability trade that you can take. So when price reaches Fibonacci support here, guess what? There's nothing to do. You don't know if it's going to break. Hell, you don't know if it's going to bounce. The only thing that you can be sure of in that moment is that you've lost the advantage of a clear path, and it's okay to do nothing, guys. Nobody has ever been required to make all their money by 9 a.m. Ever. Billions of dollars traded every day. But once you understand these pretty basic concepts, once you understand the idea of triggers through means broken, and no triggers means no trade, it's going to carry you, your chart read is going to carry you to your first medium probability trade. And I'm going to give you a plan. I will give you a plan. Yeah, it has, Rob. To where you can take advantage of these trades where areas have the potential to break. And the potential is defined when the small triggers smash. I mean smash, guys. Let them really pop through that area. When the small triggers smash through the faster moving indicator, but the large triggers are lagging behind. In this look, this 50-50 look, 50% are through, 50% are not. You can see it. You could call it a straddle. You could call it a one above, one below, guys. It doesn't matter what you call it, but understand that trigger line location tells you that this area has the potential to break, and it's 100% dependent on that odds favorable momentum, guys. We are insisting on the best, strongest triggers we could ever have to push through that area. And this 50-50 look is going to end up being an awful lot of trades for you guys. So I'm going to give you a rock solid plan on how to take it with the highest chance of success. But if you don't understand momentum, you're going to struggle with the 50-50. If you don't understand whether an area is broken or not, or if it's only potential, you're going to struggle with the 50-50, guys. So that kind of goes back to make sure that you're keeping it simple. Make sure that initially you're learning these very basic concepts, because they will carry you to the next level. Everybody good with that? Those are the only options. Here, the potential to break, and look at the deeper retracement, right? You might have been stopped out of a trade. Here said absolutely no longs, and it saved your bacon. The potential to break here didn't follow through, and the market ultimately goes up, guys, and there's going to be some key identifiers that'll keep you from trying that last short. And as we look at the market right now, most current bar, I don't have odds favorable momentum, but I do have a clear path. Does that make sense, everybody? There's no separation in the triggers, so the momentum is not strong. But my large and small triggers are both above support. My path is clear until I reach the next area. So I'm working on about 50% of my advantages in this current look. And then, guys, when the momentum is strong, when the path is clear, we're going to look for entries. We're going to go to a smaller, faster chart. And again, I want to say it, guys, and just because I'm all in dead horse beating mode today, is everybody okay? Give me a why in the room. Lines on the large chart can create problems. Lines on the large chart are where decisions are made. Lines on the large chart is where we have to do that comparison. And once you make that a part of your day, you're not going to get fooled into it, right? So when everything is up, when the path is clear, when the market is absolutely screaming and we can't wait to take a trade, we're going to go to the smaller, faster chart. We're going to refine that broad stroke of a brush. And guys, there is one termination condition on the small chart. Only one. And Doug, this is where I talk myself out of a million trades. Guys, the only time on a small chart that I will say rule number 2 isn't met, the only time on a small chart where I will say I don't have a clear path. Absolutely, Tom. We'll go right back to it. We'll do it on the live market too. Is 3 divergences, 3 losses of momentum in the same price range. 3 losses of momentum means that it may terminate the trend. And guys, may, might, could. It's never should, will, absolute, guys. All we're doing is trading patterns. And if you see 3 of these light blue lines from a low, 3 from a high, no more long trades, no more short trades. You have to sit on your hands and wait. It's more powerful when you take that rule number 1 lesson and you see that anything can happen triggers, guys. It makes these 3 divergences more powerful. And then if you know what a head and shoulders is, when that final pivot is higher than the previous or lower than the previous from a high, that head and shoulders patterns makes this even more likely to stop. And guys, I want to show you just how powerful this is and how easy it is to recognize it. Let me scroll back pre-news. So right here, the triggers tried to break through support, guys. And it was about 6:38 this morning. I had just opened up my charts. And I'm like, man, this area could potentially break. I just don't know. My smalls have gotten through. My large are trying to break. And then I looked at my small chart. Oops. And 1, 2, 3 divergences in the exact same price range. So do you guys see how the large chart said down? The large chart made us think that we were going to go lower. And the small chart said, hey, guess what, Tom? We might be changing. Guess what, Goddess? Things may be changing. Guys, this is the only termination condition that I accept on a smaller chart. This blue line doesn't scare me. because areas are defined on the large chart. This one divergence doesn't scare me because it takes 3. So let's backtrack and let's talk about what it means to have a clear path. So I'm going to do the basic picture first, Tom. Price is coming down and it reaches support. Support remains a termination condition until the small triggers break through, but the smalls will almost always break through before the large. I don't think I've ever seen it the other way. So you go from termination to potential to break, and then once the small and the large clear, well, then you have a clear path. So let's go back to a big chart real quick and just kind of, we'll click through it. And this is one of the cool things about what we do, guys, is you don't have to take a trade to get a lesson. Not at all. You can scroll back and check it out. So we're going to go on the most current bar, Tom, and this is for everybody. Price reaches Fibonacci support. Where are my triggers? My triggers remain above. So let's do this. Let's make a cool little slideshow out of it. Guys, I think pictures and annotation will change your educational path. It'll accelerate it. So price reaches support, triggers above. This is a term. No short trades. Rule 2 not met. So what do you guys think? Do you think that if you took this picture with that annotation 25 times or so, you'd have a pretty good idea about what it looks like to reach a termination condition? I think you would. So we're going to save that one. And then I'm going to click and boom, 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 boom. So check it out. My small triggers have just smashed through the area. Guys, this is the next step. My small triggers have smashed through the area. So let's annotate it. What are we looking at? Smalls smash through. Large triggers are not through. This area has the potential to break because of that strong triggers, those odds favorable momentum. Rule 2 not met, not a clear path. It's only potential. Is everybody with me so far? This is your second look. And guys, this is going to happen. We're watching it progress through the market right now. And then if it's going to break, Tom, so let's click a little more. Not broken, still not broken, and boom. Now the small and the large have gotten through the area. Now the small and the large are below support. Support is officially resistance. So let's annotate again. Smalls and large below support. Area is broken. Path is clear. Rule 2 met until we reach the next line. So price reaches support, no triggers, no trade. Small smash through, potential to break. Not broken until everything gets through. Does that help a little bit, Tom? And guys, this is how we do this classroom. If you need help, you tell me that you need help, and I promise you we'll make it happen. And so, Tom, all you have to do is remember that when you hit a line, just ask yourself, where are my triggers? Right? How's that for a clear path? And it just keeps going, and this path will be clear until we reach 54.25.70, if we do, and then we'll start the process over. Where are my triggers? And guys, it's not a coincidence that it was the strong triggers that broke the Fibonacci area. So all we're doing is we're keeping it really simple right now. And we're just learning how to identify a couple little things so that we can have the highest chance of success. Thank you for the question, Tom. I love it when you guys ask questions. And remember, the only time on a small chart, 3 divergences, guys. So now we're at this cool point where the large chart, we'll say it says up or down, right? The large chart has strong triggers, and I know that this is a market that's likely to continue in the direction of the trend. Just real basic, rule number one has nothing to do with lines. Write that on a piece of paper. Momentum has nothing to do with areas. Momentum has only to do with the strength of the move. Once I have it, that's when those lines come into play. That's when I make sure that I have a clear path, when I make sure I'm not trading into an area that may stop the market. And guys, once this beautiful collaboration of momentum and clear path comes together, I'm going to the smaller, faster chart. I'm going to the refinement chart. I'm going to let the small crowd fight. I'm going to let them do their thing, guys, and we're going to pinpoint exactly where they're most likely to fail. And it's crazy the accuracy that you're going to have with entries when everything comes together and creates the trade. So rule number 3 on a smaller, faster chart, I'm going to use a limit order. I'm going to be so precise with being able to identify where the market is most likely to continue that I'm literally going to wait for the market to come to me. And I'm going to have it waiting at one of those areas. And it's going to be fibs, mid-bands, or yellow 1-to-1s. Guys, lines on the large chart can create problems. Lines on the large chart are what I'm going to use to create a bounce to continue with that trend. But here's the deal. I need them to be inside of triggers. And we're going to talk about the whys on this. So the one breath, I'm going to use a limit order to buy or sell that pullback at an area inside of what we call favorable large triggers. And that is going to be rule number 3. This is pinpointing exactly where the market is most likely to continue with the trend. It's the refinement process that lets us use those 20 to 30 bars to pinpoint, guys. And then there's this gospel truth on large triggers. There's large triggers on the large chart. There's large triggers on the small chart, guys. Price returns to that moving average, those large triggers, whether it's the large or the small. So if both the small chart and the large chart, large triggers are overlapping, one on top of the other, we're going to call this favorable large triggers. What we've done is we've taken the correction point where price is likely to return on the large chart and the correction point where price is likely to return on the small chart, and when they overlap, we've taken 2 correction points and turned it into 1. We've increased accuracy, and we call that favorable large triggers. When the large triggers from the small, and then the synthetic triggers, these will be printed on your small chart. They look stepped. When they overlap, one on top of the other, I want you to picture 2 snakes riding piggyback. This is the best of the best. This is the least amount of risk. This is going to have the smallest room to put those areas inside of to continue with your trade. And that's exactly what we're going to do, is we're going to take the correction point from the large and the correction point from the small and force them to overlap to create those favorable large triggers. And then by using the areas inside of triggers, we're going to define exactly where the market is most likely to continue, guys. And that's what we're about to do right now. We're going to create what's called a window of opportunity. We're going to identify that point where the bounce is most likely to happen. And it begins with odds favorable momentum on the large chart. So the large chart is screaming up. The large chart has absolutely nothing in the way. And guys, that small crowd is going to show up and try to fight. They always do. I don't know what got into them, probably not hugged enough as children, but they love to fight, guys. And that fight begins with the reversal bar. The reversal bar is not your entry. The reversal bar just signals the beginning of the pullback. So once the reversal bar prints, and guys, you're typically going to have anywhere from a minute to 4 minutes to go through everything that I'm talking about. The more you study it, the faster it happens. Once the reversal bar prints, I find my favorable large triggers. That's the red box. They should be overlapping, one on top of the other. 2 snakes riding piggyback. And once I identify my triggers, guys, the triggers are not the entry. We're going to rely on lines, fibs, mid-bands, yellow 1-to-1s inside of favorable large triggers. And if there's more than one line in there, we're going to create a window of opportunity, a window where the market is most likely to continue. And your window will extend from the highest point of support here to the lowest point of support. But the key is that they're inside of favorable large triggers. I expect price to come back to the triggers. The bottom of the triggers is my line in the sand. I expect it to bounce off of areas inside of favorable large triggers, guys. So we're going to activate a limit order. Going to right click on our chart and we're going to set up a limit order, and it's going to be a tick or two above the highest point of support, closest to the reversal bar, closest to price. Because remember that the large chart is flying to the upside. The large chart has absolutely nothing in the way. I'm not going to trip over a couple pennies hoping to save a few dollars. And this becomes where the market is most likely to continue. This becomes your entry for the highest probability trend trade. You've got to study this. You've got to learn to trust it, because guys, it's scary to buy the market when the market is coming down. You're going to learn to trust the large chart, because the large chart doesn't blink during this little refinement process. The other thing you're going to realize is that when you know exactly where the market is most likely to continue, when you know that it shouldn't go beyond these trigger lines, you learn to ignore the lines beyond the triggers. And you say to yourself, this is not in my window. This is not a part of the equation. I'm not even going to look at it. I'm going to keep it right here. No, Ollie. I mean, you can if you want. You're a little more experienced. But we're going to let termination conditions and strong tops and bottoms happen on the large chart. The small chart's too small. The small chart is too fast. The small chart is too refining. And those three divergences may just give a little push, right? Just a little push in the wrong direction. But the large chart's always going to lead the way. So we're going to define strong tops and bottoms on the large chart. You cool with that? And then, Ollie, did you see when I went back on the ES at 6:30 where the triggers overran the fib a little bit, and then those three divergences helped define the overrun? Those are situations where you may change your perspective, but initially we're going to keep it very, very simple. And that's one of the things that I do. Cool. Great question. So guys, for those of you, Ellie says good morning. For those of you that have never traded futures, one of the great things is that when everyone is crying about their 401ks, we're going short, and there's opportunities to make money both directions. So we can define, hey, calm down, baby. We can define where the market is most likely to continue, even going down, and it still begins with a reversal bar, signaling the beginning of the pullback, guys. You wait for the reversal bar, and I'm telling you, when the market's right here, you're going to get jumpy and you're going to get nervous and you're going to have that fear of missing out, and you've just got to trust that the fight typically happens. And if it doesn't, it's just not your money. But once that reversal bar prints, not your entry, you're going to find your favorable large triggers. And then once you've identified favorable large triggers, all you really have to do is pinpoint that area inside. And guys, there's one line inside of favorable large triggers here. There is one point where the market is most likely to continue. Your job is to activate a limit order 2 to 3 ticks below it, understanding that price is likely to correct to the triggers, but it's more likely to bounce off the line. And all of these lines on the wrong side of triggers, guys, these are not in your window of opportunity. This is not where we're looking for the entry. By the time it goes past the triggers, we don't want to be in that trade anymore. And your ability to pinpoint where the market is most likely to continue, taking that very simple process of momentum, clear path, and definition. And I promise you, if you stay focused for 20 days, you are going to nail entries. You are going to be amazed at what you can pull off. And that's the beginning of your management plan. When you understand where the market is likely to continue, well, you can identify where the market shouldn't go. And the market shouldn't go 4 to 5 ticks above all the trigger lines. And this will be your first stop. Your initial stop placement is beyond the triggers where the market shouldn't go. And I like that language, where the market shouldn't go. Your stop placement is not an arbitrary number. It's not 10 ticks, it's not 12 ticks, guys. You may take 10 trades in a day and have a different stop value for every trade. You're going to put it where the market shouldn't go. And if the small crowd can push beyond the triggers, beyond the areas inside of triggers, you're just going to have that stop waiting, and you're going to say, you know what? Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, which is why you can't base your trading plan off of the one trade and what happened. You've got to base it off of 20 to 30 trades. You've got to look at a sample and make sure that if I take this entry 10 times, I know that I can typically win 7 or 8 of them, which means that I'm going to lose 2 or 3 of them, and you never get to pick when those losers happen, guys, and that's why consistency is key. So if it doesn't hit your stop, and more often than not it won't, you may get that reversal bar in the direction of your trade. The same way you waited for a reversal bar to signal the beginning of the fight, this reversal bar kind of confirms that the fight is over, that things are starting to go that other direction, and your initial stop will go a couple ticks above it, and you'll reduce risk. You'll manage your risk before you ever manage profits. You'll manage your risk through the idea of strong triggers, and you'll manage your risk through the idea of not trading into areas, and you'll manage your risk through pinpointing where the market is most likely to continue. And guys, if you keep this your focus for 20 days, life can be easy for you. Trading doesn't have to be stressful. Study is the best way to do it. And this is the final picture on the slideshow, guys. You can go back and start to study these looks, and you can do it without taking a trade. You can do it without the pressure of winning or losing, without being right or wrong. All you have to do is go back on your large chart, and when you see that overwhelming momentum, and you see either the potential to break or that clear path, circle the tail. And if that tail lines up with an area of support inside of favorable large triggers, guys, this is your best of the best. This is exactly what you're looking for. This is exactly what you're learning to trust, guys. And by using these tails, you can go back 10 days on every market you have a workspace for, and you can study this phenomenon. We don't trade tails. We trade pullbacks. And let me show you some cool stuff about what we do. At the top of the bar, when we've made the decision to take the trade, I've got 8 ticks before I get to trouble. Only 8 ticks from the top of this bar. But because I wait for the pullback, that 8 ticks turns into nearly 30 ticks. Has nothing to do with the tail, Tom. Has nothing to do with the tail. Nothing. That's one of the biggest things that I want to stress to you, is when the large chart, watch this. Let's see if we can find a little live example. Great question, though. When the large chart is momentum filled, and when the large chart has a clear path, I'm looking for one that really fits the rules here. All right, are you ready? So check it out. And guys, I'm gonna fudge my charts. Don't get caught up. This isn't a trade. We didn't take the trade. This has nothing to do with anything. This was one of those 50-50 trades, guys. But I don't want to even focus on that. What I want to do is I want to focus on the idea that all we're doing is we're picking our areas, and that it has nothing to do with the tail. So give me 1 second here while that loads up, Tom. And we'll go through and we'll do an entry bar by bar. And I'm going to go through the entire thought process, start to finish. All right. So most importantly, whoops. This is what it's going to look like on the large chart, guys. Smalls above the large are wide. There's space between the two. Can you guys give me a Y? If you see that the momentum is good, that it's there, that rule number 1 is met, awesome. Guys, this leads the way. This is a market likely to continue in the direction of the trend. And then there's no lines here. There's no resistance, no one-to-ones, no divergence highs. So can you guys give me a Y if you see that the path is in fact clear? And there's nothing to create a bounce on this large chart. And man, it's right here, Tom. It is right here where we make the decision, let's look for an entry. And I want you to see something. when I see strong triggers, when I have a clear path, Tom, I'm done. I'm done with that chart. There's no tail. None. So now I turn my attention to the smaller, faster chart. And this is where we're at. And it's going up. And I'm like, oh man, it's going without me. And it still goes up. And I'm like, I need a reversal bar. I need something to signal the beginning of that pullback. And guys, there it is. There's the reversal bar that signals the beginning of the pullback. If your reversal bar dissects a line, guys, that line's not in play. That's not your entry. So at the time of the reversal bar, let me get the large chart back up just because it looks weird. At the time of the reversal bar, my job is to draw a box from the top line of the triggers to the bottom line of the triggers. I've identified my trigger lines. Is everybody with me so far? Wait for the reversal bar. Large chart hasn't changed. Large chart still says up, nothing in the way. And then watch the refinement process. From the highest point of support inside of favorable large triggers to the lowest point of support inside of triggers. And what we've just done, Tom, is we have pinpointed exactly where the market is most likely to continue, right? It's an area. This is where I'm expecting a bounce if this is going to continue up. Everybody good so far? And I don't know where the market is trading. 54.11? Cool. So I'm going to right click, guys, on my chart below price, and I'm going to activate a limit order. And I'm going to put that limit order 2 ticks above that mid band. And the only thing left for me to do is pray. Is pray that the small crowd has it in them to come and get me. And it's a waiting game. So the timestamp on this one is about 9:30. That one was quick because it was right at the market open. So the market pulls back and I'm in a trade. I'm in a long position, guys. I'm in a long position with the advantage of momentum. I'm in a long position with a clear path. I'm in a long position having entered where the market is most likely to continue. My initial stop is going to be about 5 ticks. So 42, we'll just go right around there. Somewhere around that 54.01 area. And I'm done. I can't do anything else. And look at that, it goes against me and I get nervous. And it keeps going and I start to swear. And it goes again and I kick the dog. And guys, then it starts doing everything that the large chart said it was going to do. And I get that reversal bar. And this is where I reduce my risk. And then it starts going in the direction of my trend with all that momentum. And it keeps moving, right? There's little fluctuations. This is a tiny chart. And look at all of this action right here. Check this out, Tom. That box is right at the base of that tail. That box is right at the bottom of that tail. And it had nothing to do with the tail. The large chart looked like this. We pinpointed exactly where that tail was most likely to form by using areas inside of favorable large triggers. We gave it a little bit of breathing room. And guys, this is what we just talked about for a whole hour. Was this look right here. So one of the easiest ways to learn this trade is to wait until you have momentum. Let's see if there's another example. Circle tails. And this was right in the middle of news, guys, so I don't know what happened there. I mean, that was right in the middle of news. Right at 8:30. And it still came right back. It still did the exact same pattern. And if you scroll back, guys, you can just keep doing this. You can keep going back and circling tails. And they won't all be high probability trend trades, ladies and gentlemen. They won't all be trades that pull back to areas inside of favorable large triggers. But what you can do is you can start to recognize the pattern, that it does repeat over and over. And eventually, you're going to turn it into the basis of your trading plan, areas inside of favorable large triggers. So Tom, does that make sense? How we're not waiting for tails, but rather we're going to use those areas inside of favorable large triggers. We're going to go through that refinement process, and it's going to allow you guys to reduce risk, and it's going to allow you guys to maximize profit potential. And that was how you can study it. You're day 3, brother, or day 2. You're going to be fine. You're going to, and I tell everybody, the first couple days feel overwhelming. All you have to do is hear the same thing 4 or 5 times, and it really starts to stick. It really does. So one of the things that I give you guys, let me take this one off to the side real quick. One of the things that I give you guys every day, look at that. Termination to the tick. Does everyone see it? Is anyone else amazed by this stuff? Or is it just me? You guys knew exactly where it was and you knew not to trade into it. Freaking amazing. Freaking amazing. So how do you get to where you want to be sooner than later? Guys, chart reading 101. Chart reading 101 will be insanely helpful for you. Chart reading 101 will create recognition. Give me 1 second, Ollie. I'm going to go through my thing. We'll cover that second hours, I promise. Chart reading 101 is going to set you guys up for becoming a chart reader. It's going to make recognition easy. So in order to get to where you want to be, guys, the same way that I did it when we went through those strong and weak triggers, you've got to know these looks. So Goddess Divine and M-Led, when you're brand new, all we need to do is we got to recognize momentum, and we got to recognize the clear path. So take 25 pictures. It'll take you a little bit, but take pictures of strong triggers and weak triggers. Know both sides of the coin. Take pictures of a clear path and of termination conditions. Make sure that you're cool with both, because that's the basis of the high probability trend trade. Go get some of those entries when you circle tails, right? And don't just take the pictures, guys. Annotate it. Why is it strong triggers? What does it mean to me? What's the advantage? What rule does it pertain to? And if you go through that for 25 pictures each, and this is what? That's 120 pictures, guys. 140 pictures. That's not a lot of pictures. I take 140 pictures by Wednesday every week. What's going to happen is you're going to take those little pieces and you're going to piece them together, and you're going to create a high probability trend trade. But all you're doing right now is recognition. So you want to be able to look at your chart and say, I don't have momentum. I don't have a clear path. I got to do nothing. I have to sit on my hands for a minute. And guys, in the beginning, it's very black and white. It's either strong triggers or it's not. It's either a clear path or it's not. And then it takes you into what Ollie was asking. So odds favorable momentum is always the full separation. As the small triggers, one line gets inside, but one line is out. Guys, there's still momentum, but it's never odds favorable momentum. It's never the best of the best momentum. It's never the highest probability momentum, but the market's still cruising. And when you're a chart reader, you may find opportunities. And then weakness will always be weakness. And there may be a point in your life where you still find opportunity. But this is your best of the best. Does that help, Ollie? Does that answer? I will never consider this odds favorable momentum, right? Because if this car is blue and that car is red, I could never call them the same color. The looks are different, and all we're doing is recognizing the looks. And that was an awesome question, and that was good timing. So as you develop awareness, guys, as you start to really learn these looks, I'm going to give you a trend trade checklist. High probability trend trade checklist. Let me pull it over here. And it's 2 pages. One page is just a a checklist. And these are the rules for the high probability trend trade. And guys, I've never in the history of this trade had anybody follow these 4 rules. And this is where that strong top or bottom comes in. We can talk about that. When the market reverses off of a termination condition, guys, and none of the triggers broke through, we call that a strong top or bottom. I've never had anyone mark yes to these 4. You don't have to have a strong top or bottom to take the trade and do worse than 70%. Most people are mid-80s. So this checklist is a great way for you to police yourself in the beginning. This checklist, Tom, Goddess, Nerve, all these names that I'm just now seeing that I love seeing new people. If you start writing these things on your chart, when you annotate, did I have odds favorable momentum? No terminations. And guys, this is such a kicker. Areas inside of favorable large triggers. If you write this on your chart, it's going to be difficult to not follow your rules. But as you're brand new, as you're just learning, the second page is what it looks like. So guys, when I say strong top or bottom, it means that no triggers got through that termination condition. Every strong top or bottom is a termination condition first. If it reverses the market, if those large triggers roll, now it's a strong bottom, guys. It means that decisions were so impactful at this key Fibonacci area that not only did it stop the market cold, but it made it go the other direction. Your highest probability trend trade is going to happen when it comes from a strong top or bottom, but it's not mandatory. It is not mandatory. Just a little warm fuzzy. This defines your momentum and your loss of momentum. This defines, there's that same picture we made this morning, Tom. Price reaches, no triggers, no trade. Small smash, large don't. It has the potential. There's my clear path. And defining the window of opportunity, defining the point where the market is most likely to continue. So guys, I'm going to give you this as well. Use it as you go through and take those pictures to police yourself. Make sure you know what you're looking for. Let's make that a little smaller. That's kind of big. But go through this process of chart reading 101. I've never had anybody do this, even half-assed, and not feel like there weren't huge dividends paid off of that simple chart reading, not putting the pressure of a trade on them. And then finally, you're going to take these very basic concepts and you're going to apply them to the KISS plan. The Keep It Simple Sunshine Plan. HR said I can't call anyone stupid, so keep it simple, sunshine. This plan is a stepping stone, guys. The high probability trend trade is not your only trade. It's just your first trade. It's the best of the best. It's the highest probability of success. It's the trade that typically wins 70 to 80% of the time. It's the trade that creates confidence. It's the trade that teaches you to read your indicators, guys. The high probability trend trade is the foundation from which your trading house will be built. This KISS plan is designed to optimize your chances of success, to create a plan that you can win more than you lose as you learn to read your indicators. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's AI telling you that, guys, when you can read your charts, when you can find this high probability trend trade, 20 days of study, you're going to begin to see opportunities that you didn't even know you were looking for. You're going to begin to recognize patterns that you didn't know existed today. And you're going to develop a trading plan that suits your needs. The high probability trend trade might not be your trade. You might be a momentum trader. Because, Tom, it's the one pattern that we have recognized in over 27 years of teaching people to trade that wins more than it loses, that is high probability, that revolves around nothing but advantages. And the reason I do that is because if you begin just jumping in arbitrarily, and let me show you. If you start just jumping it, you're like, oh man, I've got momentum and life is good and here I go. The high probability trend trade is designed 100% around the idea that the market fluctuates, that the market goes up and down, that the market is in this constant state of fight from buyers and sellers. Retracement, retracement, Rob, that little pushback. And then, Tom, one thing that I want you to notice is during that retracement, do you notice how the large chart doesn't blink? The momentum stays constant and the path remains clear. And the idea is that we know without any uncertainty that this fight happens all day long, right? So we could try to jump in and hope that it doesn't happen, or we can embrace the idea that this is a pattern that repeats itself every day, that this is a pattern that you'll find on any market that you trade. And I don't care if you're trading stocks, options, I don't care if it's Apple or Tesla, crypto, you're going to see this pattern. So Tom, I teach this pattern first because once you can identify momentum, once you can know whether or not the path is clear, dude, I promise you, you're going to find other ways to skin this cat. You're going to find other ways to take advantage. But this is your highest probability. Absolutely it is. Why is it an advantage? Why is it an opportunity? Let's go back again. I love showing pictures. Because what does the retracement do? The retracement gives you a clear definition that reduces risk, right? Because if I jump in at the top and I know that this is a factor, doesn't my stop have to be way down here in order to keep it where the market shouldn't go? Of course it does. Jumping in increases risk. And if I'm only 8 ticks away from that pink line, but I wait for the retracement and suddenly, instead of making 80, I make 320, isn't that an opportunity? And I'm telling you, this is it right here. This is the reason, once you see this, you may capture profits from here to here. Once you learn to see this, you might add on when you clear trouble. But until you can really focus on momentum and a clear path, until you keep it really simple, you're going to have trouble deciding what is advantageous and what's detrimental. So this keeps the new user focused on the best of the best. And what you'll find is that that simplicity actually takes a lot of the pressure off of learning how to trade. And you'll also, and I'm sure there's people in this room that don't have to admit it, but they will, is when you stop following your rules and you start trading opinions, you tend to not catch as many winners. You tend to overtrade. And this KISS plan is a great way for you more experienced users to come back to simplicity. If what you're doing isn't working, this KISS plan gets you focused on what does work. And Tom, I've had people follow the KISS plan to the letter and get funded in those prop firms within their first 30 days with Nexgen by keeping it simple, to make more profits than losses, to be successful straight out of the gates. And I'll tell you right now, we are the biggest sabotagers of our success because we all believe that we can control the market, and you can't. The market doesn't give two shits about you, respectfully. The market doesn't care about your mortgage. The market doesn't care that you've got a tea time at Pebble Beach and you got to pay for it. The only thing the market is going to do what the market does. And guys, we've identified patterns that repeat themselves that create advantages. So define your entry, guys. And then most importantly, brand new users, I'm going to give you the secret right now. How do you avoid 60 to 70% of the mistakes new users make? How do you avoid financial suicide? Guys, don't fight the large chart. Don't trade against strong triggers trying to be the first one in. Don't trade into termination conditions hoping that they break. These are the two most common mistakes that new users make. And if you commit from day one, and this is tongue-in-cheek, right? This isn't a real book. My brother didn't really write this. But he did this because these are the two things. In 27 years of teaching people, opinions whip your butt. And this helps you avoid two of the most detrimental opinions, guys. Don't trade against strong triggers. Don't trade into termination conditions. Define your entry. Great entries create manageable trades. Great entries reduce risk. Great entries escalate profit potential, guys. And once you can define your entry, once you can find that point where the market is most likely to continue, and I'm telling you right now, if you keep it focused, if you use the chart reading 101, if you participate in class, I don't think there's any reason why anybody in this room couldn't be couldn't be proficient in their first couple weeks. The delay in education happens when you deviate from the plan, guys. The plan is solid. Once you enter the market, right? So let's go through this. Once I have odds favorable, I wait for the reversal bar. It's a process. That's all it is. It's a pattern. Once I get the reversal bar, I identify my triggers. Once I've found my triggers, I find the areas inside of those favorable large triggers, and I've created a window where the market is most likely to continue. And the only reason I've done all this work is because the large chart told me to. And then once I've identified my window, guys, my limit order goes at the bottom of it. And pray. I've done all I can do. But if the market, if the small crowd pushes up to that entry, right on, Ollie, we'll see in a little bit. If the market pushes up to that entry, I'm in the market. I'm in the market with odds favorable momentum. I'm in the market with no termination conditions. I'm in the market where the market is most likely to continue. And guys, this is where the pulse escalates. This is where the palms get sweaty. This is where the butterflies get methed out and start flying in your stomach, guys, because now you've got to do something with that great entry. Now you've got the risk of loss. Now you don't know if it's going to win. And guys, you've got to accept that you don't know. But this is the pattern that typically wins 70 to 80% of the time. Your study will develop that trust. And your initial stop will go where the market shouldn't. 4 to 5 ticks beyond those triggers. Guys, I need to fix this picture. And once you're in, you're either going to get stopped out. And guys, one of the best things you can do is take your biggest, fattest crayon and write on a piece of paper in front of you, I will lose trades. It's okay. It's a normal part of a positive equity curve. I will not win every trade that I take. But if I insist on taking trades with the advantages, I'm more likely to get a reversal bar in the direction of my trade than I am to get stopped out. So the second step in your management, if then, the KISS plan management, if I get a reversal bar in the direction of my trade, then I will reduce my risk 2 ticks above that reversal bar. And guys, it's not uncommon to see Nexgen users take the perfect trade and still get stopped out, but only lose 20, 30, 40 ticks or dollars because their entries are so stinking precise. And if I don't get stopped out on the new one, guys, with all of those advantages, it's more likely to hit my first target. And for the KISS plan users, guys, it's only $100 in the distance. $100. That's it. That doesn't feel like a lot, right? But nobody's going to step over a $100 bill. Guys, if the best you could do every day of your life is $100, that's an extra 25 grand a year. And now with trade copiers, when you get to where you can consistently make $100 a day, you could turn that 100 into 2 grand. We'll talk about that. But now I've got 100 in the bank. They can't take it from me. My palms stop sweating. The butterflies go away. And I'm going to move my stop to break even, guys. I'm going to have 0 risk on the trade. And the only reason that I'm doing that is because I have to believe that odds favorable and a clear path is the recipe for success. So I've got 0 risk, I've got money in the bank, and it's either going to stop me out break even or it's going to hit my second target, guys. And my second target is only $200 away from entry. That's it, $200 away, which means with the advantage of momentum, with a clear path, with that awesome bounce off the area inside of favorable large triggers, I just captured $300. And I don't care what happens next. I got paid. And that's the goal of trading, ladies and gentlemen, is to make more money than you lose, to get paid. And you will become so effective with your chart reading and your plan that you'll be able to exit this trade. You'll be able to capture those profits and you won't blink an eye because you know that you have it in you to catch the next trade. And I want to show you this. Daily goals, guys. 252 trading days a year. Mark, I can't live off of $300 trades. Guys, it's not your only trade. But if the best you do every day is $300, that's a $75,000 a year. I think, and I feel very strongly about this, that the average user following a solid plan should have no problem making between $500 and $800 a day. So now you're six figures plus, guys. And when you really start to get your groove on, $1,000 on a couple contracts, that's not unreasonable. Not even a little bit. And then the coolest thing, and it's awesome because my brother sent me a message this morning about his programmers writing the copier, is you can take a trade copier. And that trade copier allows you to take the wins from one, let me pull up my calculator. In one account, if I make $100, I can take that $100 and I can mirror that account on 20 accounts, which means that my $100 trade just became a $2,000 trade. And that $2,000 trade based off $100 a day, 20 accounts, puts me in the $500,000 range. It's not about more trades. It's about better trades. And then Pete, your $1,500 a day is what? $400 a contract, approximately? Or maybe even less than that. So about 400. So guys, while Pete's goal is $1,500 a day, he's only trying to do this right here, right? It feels overwhelming to try and make $1,500 a day per contract. But if $1,500 a day is the goal, let's do it again. That's not a bad year, Pete. You could buy me something nice for Christmas with that kind of money. So guys, the idea is that we keep it simple, that we keep it focused. No, there is no fast way to melt wealth. You know what the KISS plan is, Trading Book? The KISS plan is the fast track to consistency. The fast track to trading with advantages. The fast track to being able to read your indicators. And if you're focused on the money before you're focused on the process, guys, you're putting yourself in a losing situation. Focus on the process that yields results. And the results tend to follow. And then one more thing, and I'm going to give you all of these, guys. As you simulator, guys, go willy-nilly. Go crazy. Go ape shit. Take every trade you think you see, but make sure that you annotate the chart why you took it, and we'll refine you back into those lessons, right? Two things you have to know before you ever go live. Why will you enter a trade, right? What are my rules? What's it take to get me to pull the trigger? And then you've got to know why you're going to exit. And guys, this is where most traders fail, in my opinion, is they take these great entries, but they have no idea how to manage it. They don't have a set of rules for managing it. I was the epitome of this. And guys, I love to teach this class and share my own experiences. I got so good at entries after the first time I blew out $5,000 in a day. But I was so terrified of loss that I would take 20 trades a day and I would make a tick or two on each trade, and I would actually be down money because of commissions, because I didn't have an exit plan. I didn't have the trust in it to get the most out of the trades, guys. So you got to know why you're entering and why you're exiting. This is a non-negotiable. You have to have a trading plan or you are more likely to fail. Commit to having the rules met. Rules should be patterns. The pattern should win more than they lose. Give me 1 second, Z-Robot, and I'll take a look at it. Process yields results, guys. So if you're in a high probability trend trade, right? Brand new user, your exit plan is the KISS rules, and this is the most mechanical approach to management. And until you get the ability to read your indicators, until you get the ability to understand exit conditions, this is the easiest way to do it. Very mechanical in, very mechanical out. And then you're going to begin to recognize patterns that change that management plan. But if you're looking for a KISS plan and a 50-50 plan, 50-50 trade, they have different exit conditions. You've got to know both, right? And if you're brand new, that can get confusing. And then if you try to add more, it becomes even more confusing. So Tom, backtracking to why we do the high probability trend trade first is it keeps you thinking about 3 rules and 2 charts, and that's it. And then that focus comes back in and helps out. Total numbers of trade, 7 days of work, 64% profitable. I love it, Z-Robot. But here's the question. There's more information to be had. In that 7 days, and who works 7 days? We're traders. We work 5, brother. Sometimes 4 if there's a holiday or we get good at it. On that 64% winners, are you profitable? That's the question. Because I've seen people lose on 64% winners. I've seen people take a tick and then lose 300 from hope. So the percentage doesn't mean you're profitable. But with some solid management, you can. But this right here, and the reason I ask if you're profitable, because if you're not, then management is your challenge, not entries, right? And we need to focus on management. And if you are profitable, well, then I would say keep doing what you're doing because it appears to be working. So that's awesome. I love it. And then, guys, this is a longer first hour because I have a lot of new people in here. So I wanted to make sure that everybody gets what they need. I'm going to drop in the room right now. There is my tracking sheet. And guys, remember, my tracking sheet has a place for you guys to go back and study other people's trades. There's that very mechanical management plan. And guys, there's reasons to hold for bigger trades. Patterns that repeat themselves. There's the entries for longs and shorts for the high probability. It gives you a place to build your trading plan as you begin to recognize these things and grow outside of the high probability trend trade. There's the 101 page where, guys, you got to flood this with your pictures. Don't rely on my pictures to make you brilliant any more than you would rely on watching Michael Jordan shoot free throws to become good at free throws. And then, guys, your trade tracking sheet. Don't skip this part of it. Annotate your charts and make sure that you study them. So there's my spreadsheet. You guys have that. And then I'm going to give you the chart reading 101. I'm going to give you that daily goals sheet. I'm going to give you that exit conditions sheet. I'm going to give you the high probability trend trade checklists, the KISS plan, and a PDF version of the PowerPoint that I use to teach every day. And when I say first thing in the morning that I'm going to give you everything that you need to be successful, you just got it. So, Milad, whoops. You can download these and they'll go to your download folder, or you can just click it and drag it off to the side and you can put it on your desktop. And this is everything that you guys need to be successful. You're very welcome. And I give these out every day, guys. So if you're shy and you don't want to download it today, we're going to do it again tomorrow. And this is the first part of every day, guys. The first hour of every day is exactly what we did. And if you're on day 1 or 2, you're like, well, man, I didn't get it all today. What am I supposed to do tomorrow? I promise you, tomorrow is going to be exactly the same. And this is our focus. Tom, did you notice how we talked about the same advantages, the same entries, the same management? And guys, there's a point where you hear something enough that it begins to stick. So don't put the pressure on yourself to make it stick on day 1, but keep it focused, ask some questions, practice taking pictures, get them in the room. And guys, rule number 2 is putting on a display right now. And this is indecision in the S&P. And what do we see? Do we have momentum, ladies and gentlemen? What do you think? Tom, do you see it? Smalls above the large? Hell yeah, you do. 2 days, and you can already see momentum. Do I have a clear path? Are my smalls and my large above resistance yet? Not yet. Smalls are trying to get above, but look where your large triggers are. The path isn't clear. So now what I know, Tom, is that we get to work on termination conditions with you. We get to go through and study those termination conditions a little bit and make sure that your recognition's cool. Yeah. So what I've got is not quite even an area with the potential to break because the second line hasn't gone through, and I'm just in a holding pattern and I'm waiting to see what happens. So guys, I'm going to take 5 minutes. I always encourage you guys, take 5 minutes, walk away, stand up, scratch the dog, refill your water, do something other than sit and stare at a chart that isn't giving you your rules met, because little devil on your shoulder will tell you to take the trade anyway. So I'll be back in about 5 minutes, and then we're going to start going through everybody's pictures, and we're going to talk about momentum, clear path, and entry on every one of them, no matter what kind of trade they are. So I'll see you guys in 5 minutes. Go stretch. Large chart has momentum. Large chart has the potential to break the areas. If I get a pullback, this midband represents the area of support inside of triggers. Can everybody give me a Y if you see it? Large chart has momentum. Large chart has the potential to break. It's not broken. Those large triggers aren't through. But if I get a reversal bar, this midband represents the area of support inside of favorable large triggers. That resistance right there has stopped printing. It's turned into support, guys. The only thing that I'm not in control of is whether or not I get a reversal bar. The only thing that I can't control is whether or not I get a reversal bar. That's it. Everything else I'm in control of. I'm in control of having momentum, and whether I choose to have it, I'm in control of the clear path. I'm in control of the entry area. So, David, one of the things, and this isn't a rule, but this is an observation. If my reversal bar that gets me in the process of finding my entry dissects an area, I take that area out of the equation. And this bar would go all the way to the other side of support. So how could I possibly enter 2 ticks above support if the reversal bar is going to take me to the wrong side of it? right here on the small, right there. If this reversal bar gets to the other side of support, some of you guys catch this as a momentum trade. And a lot of you will have the opportunity to do that. But look at this now. Now I've smashed through. The large triggers are still coming up. And David, guess what? Now your fib is in the equation. So guys, I never got the reversal bar. But now my window of opportunity isn't just the mid-band. Now it extends from these 1-to-1s to the mid-band. And that represents the point where the market is most likely to continue. And now I've reached a line and the triggers didn't break and I cancel my order. And guys, sometimes it isn't your money. But you have to constantly be talking through that process. Where are my triggers? Do I have momentum? Did I reach an area? Where is it most likely to create a bounce if it's going to happen, right? And if you constantly do that over and over, what happens is the thought process, you'll start anticipating entries long before they ever happen. So that was kind of cool. I just saw it. I thought I'd go through it. And then, guys, I'm going to scroll up to the top, and we are going to start looking at some pictures that you guys posted. PFI got us going this morning, and PFI says, let's make this bigger, had some momentum down, absolutely, missed a resistance level here, thought you had a decent entry, got stopped. And you know what? I don't disagree, but if you had a resistance level there, then you traded into a termination condition, and it stopped the market. And you know what, PFI, I was watching this one as well this morning. And with that look, I have a set of rules to get me into the market, and I took a small loser on that one as well. It was great. It was a great look. And your entry was perfect, and your stop was maybe a little higher than it needed to be. And then when it headed the other way, you just made it back. Great job, PFI. But it's tough sometimes, right? Anything that wins 70 to 80% of the time, it's going to lose 20 to 30% of the time. And you gotta figure out how to be okay with that. Whoops. All right, Pete. There it is. Triggers rolled, divergence down, odds favorable, 50-50. You get in on the pullback to the mid-band, understanding that it could go to the triggers, so your stop's in a good spot, Pete. And guys, stop placement's one of those things that are going to keep you in good trades. With this much momentum and the potential to break, Pete knows it's likely to go down, and he knows that he's got to be cool with the stops, and he's got to let it breathe, and he's got to be willing to lose in order to win. He sits through all the silly little dancing because decisions are made, fights happen, and takes all that momentum down to support. And Pete, this is absolutely beautiful. And 525 is not a bad way to start the day. You're a third of the way to your goal. And then when everything says up and the momentum is strong, Pete takes a momentum style trade and gets out at trouble. And it's beautiful. Momentum for the win, guys. I'm telling you, once you get momentum under your belt, once that becomes a part of your life, momentum pushes the market. You're going to find more ways to capitalize. And Pete, you did a beautiful job on both of those. Red Rob. So magenta line is no clear path. I love the question. Are you with me, Rob? What has to happen for that magenta line to be a termination condition, guys? Do you remember the first part of identifying trouble? Price has to reach the line. Price has to make it to that magenta line. Until price makes it to that magenta line, dude, that's a target for your long trade. So what the magenta line is that's where I'm going to say, hey, you know what? I might get paid at this line, or I might take a portion of my profits at this line, because this magenta line represents a point in the market where decisions may be made. Does that make sense, Rob? Until price reaches it, ladies and gentlemen, it's a target. Don't let something in the distance scare you. Anybody? Can you guys hear me? Great question, Rob. I'm okay talking to myself. It doesn't faze me. But I just want to make sure that you guys can hear me and you're choosing to not respond. Not because you can't hear me. Alright, we're going to find the next picture. I scrolled all the way to yesterday. I overshot. Yesterday. Alright, here we go. Joel, let's see what you did. Man, I got lost for a second. Joel says, odds favorable momentum. Clear path. That was the easy one, right? And then everything says up, and it looks good, Joel. Your mid-band is swinging in between, right? It's caught in between the two correction points. You take the mid-band, it gives you a reversal bar. And guys, this is a trade that fails. And I want you to see this. Odds favorable, clear path. This trade fails, but because of Joel's management plan, because Joel puts a stop 2 ticks behind the reversal bar. Joel, you lost what? 2 ticks on this trade? $25? That doesn't sting too much, ladies and gentlemen. Having a plan and sticking to it. And so often I see people get these reversal bars and still get stopped out way down here for $300 or $400. You don't have to do it. You've got Nexgen. Congratulations. You've got precision. You can turn your losses into tiny little losses. And eventually you can turn your wins into really excessive wins. All right, who's next? Ollie. Ollie, are you back? I know you had to drop kids off. Man, that's the same one that got all of us, I think. This is awesome. Strong top. Termination that reverses the market, guys. That's a strong top. That's momentum. At the time of entry, we're outside. I see what he was saying. He's like, wait a minute, we're losing momentum a little bit. And he's got a pretty good look here. They're a little tucked in. Clear path. Takes the entry. Makes his money. And that weakness ends up pushing the market up. Great trade, Ollie. Getting paid. That's 2 trades so far we've seen fail. And no harm done on either. It's part of it. And your ability to read your indicators will make it to where you can manage these beautifully. Trading book. Odds favorable momentum. No clear path. I love that you said that. You have a great entry, rock star stop placement. And since you know it's not a clear path, you just get paid quickly. Trading book. Great entries, make manageable trades. And guys, I really want to stress something that we see here. Trading book, analyze, right? He went to his advantages. And I want to show you, and I love this. I do this every day, and I really think, gosh, one of the days I'm going to follow my own advice and make it. If there's 3 advantages, print this out, guys, and take 3 pieces of paper, 1 for each advantage. Whoops, wrong one. And Trading Book had momentum, right? He said, man, those are the strongest triggers ever. I'm just butchering this thing. And he identified that I don't have a clear path. So he knew that he had the strongest trigger look ever. And he knew that there wasn't a clear path, and maybe he did or maybe he didn't. He said, if I have a low risk entry, I'm willing to take a shot. But he also said, you'll notice that he annotated his chart medium probability trend trade. A small problem exists. I may have to manage aggressively. So trading book, what you did is you took the idea that when one of your advantages is gone, you better be aggressive with your management, right? When one of the advantages goes away, you take the perfect entry, your stop's in the right place, you get paid quickly, and you don't hope that it breaks. You just let that momentum create a little retest. So if you were using the KISS plan, you would have made more money. That's okay. And I'm going to tell you guys right now, this won't work every time. This will not work every time in determination conditions. They're a rule for a reason, but you handled it beautifully. You traded it exactly like you should trade it if you're going to take that chance. Nicely done. NASDAQ deserves a Valium. All right, Steve Diego. The triggers are accelerating. There's not quite space yet, but the path is clear. Below favorable large triggers, but at the only area of support, i.e. the fibs mid-band, reversible bar marker more than a full bar away, enter 2 ticks above the fib. Steve, I don't think that on the ES that trigger rule works so much. It may. You might be doing some study on it. Basically what Steve is saying here, and guys, I want you to see, I'm going to try and relay everything back to chart reads. And we're going to go from the basic language on termination conditions. If price reaches support, and all the triggers are above support, support is likely to stop the market. Does that make sense, everybody? Because the cool thing is it's true on a retracement too. If all the triggers are above support and price reaches it, this is a termination condition to the downside. No short trades. And then Steve couples that with the smalls working their way outside of the large. Every indicator he has says up, and he goes, well, if this spot's likely to stop the market, I'm going to go along with everything saying up, and he gets paid. Steve, this is an outstanding chart read. But once you get to the wrong side of that correction point, it's not a guarantee. It's no longer high probability. Really well done, Steve. I like it when I see you guys take the basic lessons and turn them into your own trading plan. Creating a plan that suits your needs based on your ability to read the indicators. Odds favorable, clear path, everything says down. You take a beautiful entry. Your first target was hit. And you got stopped out for a couple ticks. So once again, there's the third time that we see a failed trade make money. Morgan, great job. I mean, that's all you can do, right? Beautiful. Overextension and continuation down. You've seen this pattern quite a few times. Is there a way to capitalize off of this? Are you asking me, is there a way to break your rules? So, Morgan, I mean, is there a way to capitalize? Of course there is. There's always a way. So, and I'm going to show you something. If this chart says odds favorable momentum and a clear path, and because of that, you're taking a trend trade here. That's exactly what happens, right? Belt, don't you go and throw extra stuff on there. So Morgan, this is a 13 and this is a 5, right? For the highest chance of success, over here, you need a 21. And you need a 21 that has odds favorable momentum. And you need a 21 that has a clear path. And then what happens is you start saying this higher time frame, here's a likely spot for the pullback. And then you refine your entry here. So there's ways to do it. It's just a trend trade, isn't it? That's all it is. It's continuation from an area of resistance in a market that's likely to continue down. So the same way you use a 5-1, you'd use a 21. Or you'd use the 13, and you could do your entry here. And what probably would have happened here, to be honest with you, is you would have gotten in at resistance, right? Maybe with a reversal bar, and you would have been stopped out. And then you'd get back in, and maybe that one works, or maybe you get stopped out again. So what happens is the 2-chart process is solid. It really is. But Morgan, there's a million ways to do it. I don't have a written plan for it. And you're right, Belt, you can capitalize. One of the things people do, and let me get all this nonsense off of here. One of the things some people do is when all of this is happening, right? And that's a good look, Morgan. The large triggers never rolled, the small never got above them. And then that divergence prints from a fib. There are some people that will take that as a, oh my gosh, it's time to go with the trend. And they'll wait for that divergence confirmation, and you don't get it till about right here, which means your risk is up a little bit. You're really putting your eggs in a basket. It's a little higher risk, but with this look, large chart leads the way, there could be some advantages to that. And guys, I can tell you right now, you'll get to the point to where you'll open a chart and you'll be like, I see this, I saw this. And you'll start telling yourself, I missed this trade, I missed that trade, I missed this opportunity, I didn't catch this opportunity. And guys, there's a million ways to make money. But the whole goal is that you find a pattern that has been proven to win more than it loses. And just because you think the market's going down, and it does that time, it doesn't mean that you suddenly need to change your plan. It just means that it's not your money yet. But it might be one day. Who knows? And I don't mind talking about any of them, guys. I don't mind talking about any of the patterns. And I'll give you guys everything that I have in my personal arsenal to help you out. But there's just more to it. There's more moving parts. And it goes back to that Sunday school answer. If you're not successful with the basics yet, why confuse it? And you can if you want. Some people just like to be confused. I read that buffets. That's funny. Don't lose money. Don't forget rule number 1. You know, I would disagree a little bit. And of course, I don't have Warren's money. Yeah, maybe I'm hungry. I saw a buffet. But one of the things I bet you Warren Buffett would tell you is that he loses money all the time as he makes money. I've never met a trader in my life that didn't lose money. I've never met a trader in my life that didn't take losses. But one of the biggest things is the losses that they take they're just a part of the equation. And if you're not in tune, they're calculated. That's it. So it's saying that I have an advantage, right? Are you guys familiar with Mark Douglas? Some people are, some people aren't. Mark Douglas was an absolute guru in the psychology of trading. He and John Novak used to talk all the time. And a lot of the idea behind how Nexgen teaches comes from his conversations with Mark Douglas. And you'll hear me use a lot of the language too that you'll see if you go and look at his videos, guys. And this is it right here. And I think this goes back to the Warren Buffett thing. Guys, when you stop expecting to win every trade, you really start to win more trades. And when you stop worrying about the result, but you focus on the execution of the method, it's the method that's providing the results. It's not crossing the finish line, it's the running to get you to the finish line, right? And one of the things that Mr. Douglas, the late Mr. Douglas, rest in peace, used to say in his seminars, and I've watched hours and hours and hours of his seminars, is he goes, trading is like a coin toss. Trading is like if you have a coin and you flip it, right? It's either going to be heads or tails, and there's no discernible advantage. It just is what it is. But if you weigh one side of it, and I think it was Mr. Trimper that told me that I had the side wrong, but if you weigh one side of it and it changes the balance to where now you know with no uncertainty it will land on heads 70 out of 100, right? It's still going to land on tails, but it's going to land on heads 70 out of 100. Would you ever bet against heads? And that's the question that you have to ask yourself. If the idea of a clear path and momentum and that pullback to areas inside of favorable large triggers has been proven through study, through repetition, through back testing, to win more than it loses, doesn't it make sense that you're in that trade every time it sets up? And if trading into a termination condition loses more often than it wins, doesn't it make sense as a responsible steward of your cash flow to not trade into termination conditions? Because I want you to see this. Termination condition, let me see if I can get little crosshairs. Termination for the win, termination for the win, termination for the win, for the win, for the win, for the win, right? So what was that? 7, 1, 2, 3, 4, 5, 6, 7. 7 termination conditions win. It broke once. Does it make sense why I teach termination conditions? It's not because they stop the market every time. It's because when you trade into an area and the triggers are below, it takes away your advantage. You're betting on tails at that point. It doesn't win more than it loses. Does that make sense, everybody? The difference between the successful traders and the unsuccessful traders in my own personal experience are when you start insisting on your rules being met. Whatever the rules are, it doesn't matter if it's a high probability trend trade. It doesn't matter if it's an HVA trade, if it's a momentum trade. It just doesn't matter. But when the trade has been proven to win more than it loses, and that's the trade that you take, then you have a statistical advantage. And as soon as you abandon it, as soon as you take away one of the factors, guys, it changes the idea of expectation of winning. And then back to the Mark Douglas thing, because I think this is brilliant. Let me drop it in the room for you too. I don't know why I didn't just do that. I've read this, and it's one sheet of paper. And I've probably read this sheet of paper 100 times, easily. And it goes through it. We might as well go through it because nobody's posting pictures or asking questions. Am I in the right frame of mind to trade? When you have COVID, you're probably not in the right frame of mind to trade. When you're hungover, you're probably not in the right frame of mind to trade. When you just got out of a giant fight with your spouse, you're probably not in the right state of mind, guys. So gauge it before you're getting into the market. Are you focused? Are you clear-headed? Are you jittery from too much caffeine? Or are you level-headed, right? And all we do is we help you determine and measure the imbalance of buyers versus sellers, right? You win the trade because of the traders who follow after your entry, and that's the key. It's what happens after your entry that's going to determine your success, guys. Your entry determines whether or not you're on the right side of things. So trading without fear, hesitation, or internal conflict is a function of believing that you don't have to know what's going to happen next on a trade by trade bias to win or make consistent money. When you believe that you don't have to know what the market's going to do, but rather you understand the pattern and the likelihood of success, it takes a lot of the pressure off. It takes a lot of the fear out. And then, Doug, it keeps you from hesitating, from talking yourself out of good trades. And when you believe you know what's going to happen, you set yourself up for failure when you take a loss. And when you don't care what happens, the trade doesn't matter. It's a collection of trades, guys, not one at a time. All there are is up and down ticks. That's all the market is. It's just a reflection of price going up and down. And the emotional pain from trading, guys, it comes from believing that you know what's going to happen next. And you create your own pain. And I love this. And you guys should go watch some videos. So the 4 fears are being wrong, losing, missing out, and leaving money on the table. Right? And if you focus on your fears, you typically cause them to happen. So you'll hear me in the room sometime where I go preachy when you say you missed a trade. Nobody ever misses a trade, guys. If you're not in a trade, it's not your trade. No one ever misses an opportunity. It just wasn't yours. Watch your language, because you'll convince yourself that the market owes you if you feel like you missed. And if you don't predetermine your risk for each trade, you're operating with the belief that you'll be right. Trading with stops, guys. Trade with your stops. Define the reasons it may work. Define where your analysis may be wrong. Be willing to accept the risk by putting your stops where the market should not go before your edge is over. You know what, Mark? You watched short video of him while watching high probability trend trade. He said when patterns present itself, stop thinking, just execute. Don't think of the outcome, and it works. Amen. It's not a mistake that this is how I teach, guys. It's not a mistake that this is the concept behind what we do with Nexgen. And then here it is, compounding on that trading book. Why would you hesitate if the rules are true, right? Because you assume, believe, or think you know what's going to happen next. And when you believe you don't know what's going to happen next, and you're okay with it, you just take the trade and you don't talk yourself out of it. The pain of missing the winner is usually worse than taking the loss. You have to believe that. So fearful. When fearful, every trade is life or death, guys. Pain on every tick against you. Euphoria for every tick with you. It's not the way to be a winner. It's exhausting to trade like that. And then your rules eliminate the need to know what happens next, guys. Just follow your rules. Stop believing you know what's going to happen. Starting with a mechanical mode, paper trading, simulator to develop your skills that you need to make money. Subjective trading mode is when you take all the experience you have reading the charts and do what the charts say now. Intuitive trading in the zone is when you in the market, you just do what the market tells you to do. And then technical analysis works because the market has a memory. And then Rob, back on what you asked yesterday, being flat is literally putting money in the bank if your state of mind is wrong. Not being in a trade is better than being in the wrong trade. Normal losses are part of a natural upward equity curve. Trading the market should result in a slow upward curve with minor pullbacks. Slow upward curve. So, guys, I dropped it in the room. Feel free to read it. Feel free to not read it. Go study Mr. Douglas. He's amazing. Absolutely amazing. But getting your mind right is just as important as being able to read your indicators. My brother used to recommend that all new users recommend this right here, 7 Habits of Highly Successful Traders, and read it every day for 30 days. This one was very impactful to me. This was Emotion-Free Trading, guys, PDF. Just a couple things to work on your mind stuff. But it really does come down to the idea that you trust your plan, that you trust the idea that your trade wins more than it loses. And until you're so comfortable with your trade, that's where I come in. We get to talk about the reads, the ups, the downs, the ins, the outs. We get to talk about the advantages, the disadvantages, and we'll just keep working together until you get to where you want to be. So we got 30 minutes, guys. What do you want to talk about? This is a 50-50 trade. Odds favorable, potential to break, and it pulled right back to the mid-band right at the edge of the correction point. We'll see what happens. Yeah, fire away. Ask all the questions, please. Guys, I need a little job security. If you're not asking questions, John's going to fire me. Some of you will miss me. So yeah, any questions, fire away. Ask them. Tom, go nuts, brother. And man, I don't know. I want to know where that picture is in your little avatar there too. No. Trading book, the answer is no. Because in 27 years of doing this, the one thing that has been pretty constant, and trust me, my brother's tried to automate 1,000 plans, is the market changes, right? The patterns tend to stay the same, but the market changes, and every automated plan that he's ever gone through has failed. So yeah, no, there's no plans. And he'll have his programmers automate something every now and then just to see what it looks like. But there's no intention. Yeah. No, that's a great question. That's true, Belt. Yeah, he can't fire me. My wife would yell at him. Yeah, I love what I do, Joel. I would miss you guys more than you miss me, I think. And Tom, that's awesome. Just what a great looking picture. I love hiking. We spent last year up in the Pacific Northwest, and man, we hiked every weekend. Mountains, waterfalls. It's pretty cool when you can do what you do from anywhere in the world, guys. Belt, that's what I always say. AI is just what they program it to do, right? Nice. And the nice thing is man, when you day trade for a living, guys, I taught this classroom from outside of Big Bend National Park. I taught this classroom from New Mexico, Arizona, California, Oregon, Washington, Florida. About the pink line, Rob? I certainly did. So you need me to go back to it? Will you repost it for me? No worries, because it was a good lesson. If you'll repost it for me, I'll love to hit it again. No worries. I don't think I still have it. Maybe I do. Hold on. There it is. I got it, Rob. So guys, let's revisit. Thinking of the potential of Nexgen monitor many instruments at once and eliminate the emotions, that sounds hard to achieve. That Nexgen version, if automated. Yeah, there's little things, right? Eventually, there's a super basic way, and then there's different ways. And I don't know enough about automation, or I know squat about programming. I'm of the opinion, and Trading Book, it's because I'm not that smart, to be honest with you. I hate to admit that to you guys. Simple is better. And if I can make $500 a day, right? And that's all I make every day. That's not a ton of money. That's $2,500 a week, right? And that's $10,000 a month. And that's $120,000 a year, based off of $250 per contract. And September, Troy. September is the goal. Man, it's all coming so close. We are outside the doors and we can smell the buffet. They're just not letting us in. The programmers are finishing up some pretty cool stuff, but it won't be long until we start testing and trying to break everything so that you guys don't. We're getting close. And the cool thing is, Troy, and I love this about my brother, and I think it's pretty awesome. If you ask him about the funding company, his number one goal is that he has as many funded traders as possible. That there's more winners than losers. And that's one of the great things about combining the education with the idea of the funding firm. And it's going to make it ring so much more true when I tell you guys that we have clients that have been funded in their first 30 days with us with the KISS plan. Think about that. So, you didn't put them in the room belt. You might have uploaded them, but you have to drop them into the chat box. So you have to take those pictures and drop them in, and then I can look at them. You know that. You've already done that. All right, so Rob, is the magenta line no clear path? It's not the same, trading book. It's not the same. The entries aren't the same. Don't do it. Or you can do it if you want. Let me know how it goes. But the entries are not the same on the NASDAQ. It's not the same setup. It's not the same charts. There's different factors on the NASDAQ. It's so emotional. You can do it with the management side, but your entries have to be refined. All right, so Rob, the lesson that we talked about. Sorry, guys, I get distracted. In order for something to be a termination condition, price must reach the area. That's the first part. That's always been the first part. The first thing that has to happen without question is that price reaches the area. Rob, do you see how price didn't reach the area? Are you with me, Rob? So that pink line, if you were in a long trade, maybe you got in right here. That pink line is a target. That pink line is where you're hoping the market goes. And then when price reaches it, then we go into that thing of we've reached an area, where are my triggers? Does that make sense? Not until price reach it. So here, let's find a real world example real quick. Am I scared of this 31 area? These yellow 1-to-1s, they don't mean anything to me until price reaches them. This red fib doesn't mean anything to me until price reaches it. This blue line means squat unless price comes down and hits it. And that's one of the simplicity factors. Right now, price reached it, no long trades. But when it was all the way back here, somebody might have taken that long trade and said, that red line is my target. It's not a termination yet until price hits it. Does that make sense? So on your picture, it counts completely because you know exactly where it is, and you have for the last 30 minutes. But it's not a termination until price reaches it. Make sense? All right, belt, not high probability trend trade. Why didn't you, Rob? And so this is a great example. This is an awesome example of, oops, I just opened my email, not the picture. So Rob, what that tells me, and you know what, we're going to revisit. Let me go through belts real quick. But what that tells me is that you don't understand how to identify a termination condition yet. So Rob, what that means is you need to study termination conditions a little bit. You need to absolutely commit that process to memory. And I would say, without any question, that you couldn't show me a picture of where you've done any work on termination conditions. Right? You've had this for months, but you've chosen not to. You've hoped that you'll miraculously understand it. But even if you just click on these damn things that I give you every day, price reaches the area, right? Hold it. Let's see what this one says. Price reaches the area. Oh my gosh. Hold on. Maybe this one. Price reached resistance. So, Rob, get the gun out of your hand, stop aiming it at your foot, and learn these rules. Commit to these rules. I love this. Belt, not a high probability trend trade. Rob, I'm going to come through the monitor at you. Go through 10 of those pictures in the spreadsheet and you tell me. Come back and answer that question. There's the spreadsheet. Everything says up, but it's not a clear path. You decide to take the entry at the area and get back out of trouble. And then belt, just because it's not a high probability trend trade doesn't mean that it's not a good trade, doesn't mean that it doesn't have a chance. But you are fighting both momentum and clear path on this one. You're relying only on an entry area, but that's such a low risk opportunity. You were willing to take it with everything up. I like it. I'm not mad at you. High probability? No, definitely not. You do have momentum, not even close to a clear path. And Rob, that's why you should be working on them, right? That's why you should actually commit some time to studying them instead of hoping that it magically turns into this area where you understand things. Why do that? Why put that much pressure on you? Just study it for a day or two. You'll get it. Belt's going to get it. Belt, price reaches area. No triggers through. This is a term. That's it. It's that simple. Which means that you chose to trade into a termination condition. You chose to trade with momentum. You chose to trade from a good bottom. I love it. And you said, once again, guys, the risk isn't that much. I've got strong triggers. I know it's not the best look, but because of where I'm coming from and the momentum, there may be an opportunity to capitalize. Great job, Belt. Not a high probability trend trade, but they don't have to be. Everything says down, you take the short, and you ride it to support. It's hard to argue with it. It's hard to argue with what you're doing on the software. How did you know it was going to stop here, though? You did have odds favorable and a clear path. Once you get to the wrong side of those trigger lines, here's the deal. You don't know if it's going to be the mid band, the one-to-ones, this fib, that fib. So one thing that happens is if you're going to enter on the wrong side of those triggers, you've got to have a number in your head. All right. Well, I guess I got to give Jim Forbes the microphone. Once you get to the wrong side of those triggers, it can create challenges. There's a mid band, right? And it didn't work. And there's a big overrun on it. And there's where the mid band got blown through. And there's where the mid band got blown through. And there's where the mid band got blown through. And there's where the mid band got blown through. So the mid band isn't this magical something something, right? It's a combination. Can I respectfully disagree? And let me just throw out there, just for giggles. What if your best chance of success came from that mid-band inside of triggers? Why? Because triggers are where the market is likely to return to. That's why we get these great entries. And I promise you, once you get to the wrong side of those triggers, it's hard to determine where the market's going to stop. It's hard to determine whether or not it's going to hold. But when the conditions are great, it does. And when the conditions don't, it's problematic. It's never a guarantee. A mid-band is never a guarantee. And these trend trades are an accumulation. And let me go back to yours, and I want you to see something. Mid-band right there at the triggers. That's pretty awesome, right? Mid-band right there at the triggers. So you didn't realize you were doing it, but you had the recipe perfect twice. And look how far it went past the mid-band. There's nothing to stop it. So I like it, but let it be inside of triggers. Yeah, let it be inside of triggers. That's where your advantage comes from. Because the whole idea is that price is going to return to the triggers, and that it's the areas inside that are going to create the bounce. Good stuff. 1, 2, 3. I don't think we saw this one yet. Everything says up. Mid-band's right at the triggers again. Good bottom. Strong triggers. You got in at 10. Termination to the red fib. Good call. Good entry on the pullback. Nice job. Nice job, Belt. You're piecing it all together right now. And remember that the highest chance of success is what I teach. And then you'll learn when it's time to step outside. You will. Amen. Whew. They're all over the place here. Hold on. You were in at 625. 625. So, trading book, odds favorable, path is clear. That mid-band, that update got you. You take the entry right at the area inside of triggers. Stop keeps you safe. Nicely done, trading book. And what you and Belt are both proving is it doesn't always have to be high probability to make money, guys. High probability is just the foundation that we lay so that you can start seeing these patterns. Great stuff, man. Remember 2 weeks ago when you were all over the place? You are focused, my friend. All right, Z-Robot. You ask if this is close. I'm trying to get these to open. Here we go. Hold on. You're asking if this is too many. I like this question. Is that too many? That's so funny. You're quiet now. I've answered all your questions. I used to tell my staff, I worked for a guy, GM, he was very aggressive. And everyone's like, he talks too much. I was like, if you want to shut him up, do your job. There's always a way to quiet people. You just got to get your answers. And I love that you didn't get quiet until you got your answers, right? You insisted that we hold up our end of the bargain and give you everything that you need to be successful. I love that. I don't think you understand how much I appreciate that. Z-Robot, are you with me in here? I don't see him. So guys, this is a great question. Is this too many trades? Is 9 trades too many trades? What do you guys think the answer is to that? How about not if the rules were met 9 times, right? Not if the rules were met 9 times, then that's the perfect number of trades. If the rules were met twice, yeah, that's too many. And if the rules were met 15 times, then that's not enough. And it's not the number of trades, guys. That'll change every day. But I will tell you, Belt, and you're absolutely right, some of my most profitable days are the least amount of trades. Because I'm the 100% most focused on my rules being met. And that's it right there. And if the rules were met on all 3 of these losing trades, oh, and the one losing trade, right? If the rules were met, then that's awesome. What a great job. And then we pull it up and let's see what we have. And this is hard to read. This is gold. That's the big chart. That's also a big chart, which is weird. I don't know what this is. It's hard to read. So I'm going to go to the stuff that I know. Everything says up, you get in right at the mid-band, and you get paid. And then you exit with a loss of momentum. This is so hard to read. I'm sorry, Z-Robot. Everything says up, you go up and make money. Everything says down, you go down and make money. Looks to me like you're on a good path. I'm not sure what some of this stuff is over here. And this is really fuzzy. And I think it's because I just tried to open it. There we go. Here we go. That's so much better. So let's go to the Nexgen charts. Momentum, almost a clear path. Pull back right to that mid band, right at triggers. Make some money. Jump in without a reversal bar. And man, that's a big retracement to hold through. And then you get out. I love that you're making money. It's hard to justify. It's hard to justify over $200 risk on a trade when we're as good as we are, guys. It'll happen every now and then. But it's hard to justify having that much risk on a trade when you begin to realize the precision that you're going to be capable of trading with. But when everything says up, go up. And this is where understanding what kind of trade you're in pays dividends. Because my rules aren't meant for a high probability trend trade right here. I don't have the advantage of momentum, right? I do have the advantage of a clear path. And without that momentum, sure enough, the market pushes down. Weak triggers, the market pushes down. Second divergence, the market pushes down. So you'll begin to look at these conditions and you might be able to adjust a little bit. Good stuff. And then guys, they're trying to break. This is one for you guys that love to trade into termination conditions. On the large chart, it doesn't look like that big of a deal, right? But look at all of this on the small chart. Right at that termination condition. All of this nonsense, and we'll go to right there. This is that fight right at the key area. So every morning when I come in and I try to sell you guys on the idea that decisions are made at these Fibonacci levels, that you now have the ability to see exactly where the market is likely to stop, where the market could go, where you know exactly where the fights may happen between the buyers and sellers. Guys, if you go back and you look at these things, get rid of those, and we'll see. Obviously, right there. But look at how price dissects that key Fibonacci area. It's pretty freaking amazing. It really is. Even here, when it continues up, there's a fight. There's a struggle right at the key area. There's the dissection. You guys know exactly where these areas are, and now you've got a pretty simple plan to help you identify when those advantages are present. So we've got about 20 minutes, guys. What do you want to talk about? Let me see if we can come up with a lesson. All right, guys. The red fib. Termination or target? What do you think? That red fib off in the distance. Termination or target? What would you call it if you're looking for a long trade? Nope. I love that I got 3 different answers. So guys, what this tells me is if you're working on termination condition, I like it because I'm sneaking you guys into making me make the class better. Until price reaches an area, it is a target. Assuming you're in a trade. Targets have not been reached. Termination conditions require that price reaches a line and the triggers do not break. So guys, as you go through this, and this is one of the things that I think annotation pays huge dividends on. And this is the part that is a little taxing on you guys with weak fingers, or that don't like to type or don't want to do work, or just simply, if you were like me and you're like, I'm going to remember. So the recipe for a termination condition. The first thing that happens, price reaches an area. The second thing that happens, triggers remain below resistance, above support. And that's it. That's all it takes. So your recipe for a termination condition never changes. And it always begins with price reaching that area, because if decisions are made at key Fibonacci areas, nobody's going to make a decision until they reach it. Nobody orders their Big Mac when they're 3 cards back, right? You don't go to In-N-Out Burger and start ordering those nasty fries when there's still 3 cars in front of you before the microphone. You wait till you get to that point. All right, so price goes up. Blue fib. Termination or a target, guys? What do you think? Blue fib, below price. Is that behaving as a termination condition? That's a target. How about now? The exact same fib that used to be a target. What do you guys think? Beautiful. It's almost too easy, right? If you break it down to the very basic form, absolutely. Let me go back to, yeah, for sure, guys. This is what I do. This is the whole reason I'm here for you guys. Is so that I can repeat and create recognition through repetition. All right, so Tom, here we go, here we go. Whoops. It works here too. Price reaches resistance, right? That's the first piece. Price reaches. Triggers below just means that your small and large triggers are below the line. That's all it is. Picture a ceiling. Resistance is like a ceiling. And if you hit the ceiling and the triggers are below it, it's a termination. If you reach the floor and the triggers are above, it's a termination. So you're literally using the trigger line location to determine whether or not it's likely to stop the market. And you're literally using trigger location when the small and large get below support, below the floor. And this is all large chart. Yes, sir. 100%. Large chart leads the way. So if your triggers get below the floor becomes a ceiling. You've gone down a level. And until you hit the next floor, your path is clear. And when the small and large get above the ceiling behaves as a floor. And you're clear until you reach that next area. And that's how you're going to determine whether or not a line has the potential to stop the market. And sure enough, it stopped the market. The triggers never got below. Does that make sense? But here's the deal. Check this out. And you'll like this maybe, Trading Book. Let me find a good picture where there's just one fib. And then Steve, I'll get yours, I promise. Trying to find a single fib line. Here we go. Have you ever noticed, Trading Book, that I never reference the color of the fib as to whether or not it's broken? I always talk about trigger location. So if I put a big pink line over that fib, we'll just extend it through the whole thing. you can still identify when it's not broken, when it has the potential to break, and when it's broken, right? It's not the color of the fib. It's just the location of the triggers. And then when it hits the pink line over here, no, the color doesn't add any confirmation of it being broken. Doesn't add any confirmation of it being broken. Exhibit A. It turned blue, didn't it? But the triggers never got above it. It never broke. Pretty awesome, right? It's trigger line location that's going to define. It turned red. It never broke. Those trigger lines are going to tell you whether you have a clear path or not. Nope. Because they're both above resistance right now, and it's still red, isn't it? There's something in the programming that I don't understand. Yeah, for sure. These are the lessons, guys. Absolutely, Tom. So if I'm trading to a line, I trade to resistance on the way up, and I trade to support on the way down. So red and blue support and resistance. Trigger location will determine whether or not they're broken or have the potential to hold or anything like that. Guys, give me 30 seconds. I will be right back, and then we'll finish strong. Be right back. All right, guys. So, and then Tom, and this is one of the things where repetition comes in as well. This is your roadmap of what the lines on the large chart are. So let me drop this in the room one more time. These are the definitions, not the rules. These are just, hey, what am I looking at when I see a pink line? I'm seeing a divergence high, and this prints when there's a loss of momentum at a pivot, right? What am I looking at with the blue line? I'm looking at Fibonacci support. When the market's trending down, this is the point where the market may stop, bounce, or reverse completely, and then we'll apply those rules for termination conditions to make that decision. So study this one. Make sure you know which areas can spoil your fun. All right, Steve, everything says down. The momentum is great. Life is happy. You are 50-50 on a divergence low. Do you see it? There's no divergence, strong triggers. You take the perfect entry, and it just doesn't work. Steve Diego, would you take this trade again? Or did that 4-tick loss put such a bad taste in your mouth that you need to change your trading plan? I'd take it again every time. I would take this loss with you. 4 ticks, $80 on 2 contracts. Guys, that is ridiculously low in the trading world, especially futures. Everyone talks about, and this is what I always heard in the beginning, trading futures is dangerous. And when I talk to people older than me, trading futures is dangerous, Mark. Trading futures is suicide. You're better off if you buy a stock and let it tank. Whatever. Guys, when you trade with stops, when you have precise entries, the only thing dangerous is not following your plan, right? And that's why we focus so heavily on rule adherence from day one. That's why I preach that as loud as I can. Just follow your rules. Nexgen's been teaching people to trade for 27 years now. These rules aren't an accident. These rules aren't something that I came up with last week hoping that you guys fall for it. These rules have been going on forever. Guys, I even have a picture. In 2024, if price reaches Fibonacci resistance and the triggers roll, sell a pullback. That's from 2024. Mid-band is your first target to watch. This picture is from not even NinjaTrader. That is actually, I can't remember what it's called. Yeah, 2004. Thanks, Steve. Sorry, guys. I've been drinking this morning. Not really. Here's the momentum trade from 2004. Sell a pullback to one-to-ones with low risk when everything is going down strong. This was trade number one. Looks like a trend trade, doesn't it? Isn't that crazy? Guys, we've been teaching the same thing for 20 plus years. And I think that's pretty outstanding. It was hard back then, trading book. It's gotten a lot easier. But I think it's pretty incredible that the premise has been the same, guys. Respect the areas. If they roll, look for a pullback, right? Don't trade into them. Trade with the trend. Let that momentum lead the way. Make sure you have room to your targets. Define your entry. Don't forget to trade with stops. PFI, stopping when you're down is hard, because that little devil kicks in on your shoulder and it assures you that all you need is one good trade to get it back. And this is one of the other reasons. And let me show you guys this one. Anytime I think of things, guys, I write them down. It's just the way my brain works. So you got to know why you're going to enter and why you're going to exit, right? We talked about that. This is right here. What's your daily goal? Has anyone other than me ever been up a couple $1,000s on a day and then given it all back because they felt invincible? Because they're like, I can do no wrong. The market's perfect. And then you lose one and you know you should stop. But you don't, because now you got to get it back because you were up $2,000. And then you're down to 1,000. You're like, well, I'm still up 1,000. I'm going to keep trading. And then you're down to 500. And you're like, son of a gun. And then you're negative $200 wondering what the hell just went wrong, right? So guys, having goals every day is huge. Having goals every day is huge. And when you reach them, it's okay to shut down. And then how much are you willing to give away before you call it a day? And one of the things that, just from emails and texts and things that I get from clients, people in these prop firms, no one's ever said to me, I've had a bad week and I blew out my prop firm account. I would say 99% of the people that lose their funded accounts, that fail their challenges, they do it in one day, and typically inside of a couple hours. Because that revenge bug keeps coming back. And you're right, take a break. Get up and walk away. Holy smokes, something's not going right. It's either me or the market. So I'm going to be in control of me and I'm going to walk away. And sometimes good trades don't work 2 or 3 in a row. And you just got to go, well, shoot, it's not my day. And then just stop. Get a hobby, guys. Go buy a pottery wheel. Something like that. Go hit golf balls. It wasn't you, it was your clone. Your clone needs an attitude adjustment, Steve. But it happens, right? So there's those one-to-ones that were just a target. Are they still a target? They're a termination now, right? And it's not a coincidence that there was an instant reaction on your small chart. You knew about it. You knew about those one-to-ones since 10:30 this morning. Awesome. Have a great day, Trading Book. I appreciate you being in here and playing with us. I appreciate all you guys being in here. Guys, figure out what you need to work on, right? If momentum is easy for you, so Tom, momentum's easy for you. You've already nailed it on day 2. Rob, momentum is strong point for you. But both of you guys would be served well by taking this afternoon and go through clear path and go through termination conditions. Steal my work. I don't care. I just want you to be successful. But you'll have even better success if you go start taking some pictures of your own. If you start studying this concept, use mine as a cheat sheet. Totally cool. Because I'm telling you, everybody has a thing. Some of us trade into areas, some of us jump in too soon, some of us ignore momentum. And it's okay to have a thing. And the coolest part about what we do every day is that if you present your chart to me, I'm going to know what your thing is within probably 5 or 6 charts, right? And then once we do that, we're good. Belt, if you have the mental capacity to have 4 charts up and open, then knock it out, man. What I find for some people, and myself included in this one, absolutely. Take care, Steve. You could build them up if you had enough monitors. You could. You could put them on tabs. I switch between them too. The one thing that I find though, and it depends on your personality, is if I'm watching the S&P and I'm like, oh man, there's just not a trade for me. And then I bounce over, to crude oil. Do I have crude oil open? I do. Hold on. Let me get rid of this chart real quick. And I bounce over to crude and I just missed a trade. Then I go into revenge trade mode. I'm like, shit, I just missed it, and that was my trade, and son of a gun. And I'll find myself doing this. But if you're cool with it, I typically only trade one market, and that's just me. It's easier on me. Sometimes I'll do the S&P and crude. NASDAQ moves so rapid, and gold moves so erratic, that I've kind of stopped trading both of them. And I like that. I like that you're looking for the first 2 rules to be met on the large chart. And one of the things that you could do, if you wanted to, Belt, is you could literally build. So for example, you could come over here and you could build a new chart on your crude workspace. And do it on the S&P and make it a 13.2 and put your template on there. And you could literally have a workspace where all you have are the large charts. And you could break it down, crude, NASDAQ, and you could look at 4 large charts on one. If you're okay with that, right? And then you could go to the individual workspaces for entries where they're coupled. So that's very doable. I mean, right now I've got ES and I've got crude, right? I don't have rules met on crude. I don't have rules met on ES. I'm doing nothing right now. And that's all your attention span though, right? And you can also work these tabs where you can build a whole nother workspace on these tabs and just click on the tabs if you want. I use Shift F3 and it toggles through instantly, and that works just fine for me between 2. So everybody's going to find their groove, right? I get overwhelmed. If 3 pretty girls walk in the room, I don't know which one to look at. I just giggle a little bit and have to turn my attention away. So we've all got our limitations. You'll figure out what works for you, though. You really will. And I love that you're looking for the rules to be met first before you start concentrating on something, before you give it any credit, right? Just need to work on your rule 2 a little bit. Keep you out of trouble. Guys, that's it for me today. Thank you for being here. I feel like that was a pretty good one today.